things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
For that business. So there's some news there. We're also focused on Kering over to the French luxury space, and we've got some news flow to be expected this week around Kering and who runs what. So Kering is considering naming Balenciaga's CEO, Cédric Charbit, as the CEO of Yves Saint Laurent, as we were hearing from Joe. So we'll watch for news on that front, Guy.
The Delvecchio to sell their unit of credit stake to Commerzbank. Just an idea. Okay, here we go. Market open. We're not expecting very much, at least at an index level. Looks like we're going to drift sideways until we get a new catalyst. When does that catalyst come? What is that new catalyst? We will wait and see, but it feels like it's going to come midweek rather than early in the week. FTSE 100 is absolutely flat out of the gate this morning. We'll see what the miners do. We've mentioned that sector already. The Stock 600 is, as Critty says, down by 0.1%. The FTSE 100 is outperforming by being up 0.1% so far this morning. Elsewhere, we're waiting to get a little bit of action. The IBEX is not providing it. It is up by 0.1%. I'm rounding higher, as is the CAC Geron this morning. These are huge moves, Critty. Below the surface, I'm sure there's some significant rotation.
It's riveting. You're always leaving me with the riveting stuff, clearly. But from the miners' perspective, I think we've got that one right ahead of the opening trades here. Rio Tinto, for example, is your biggest index contributor to the upside when it comes to the FTSE 100. You're seeing the same with Glencore, Anglo American. Anna, this idea that miners are actually leading the way higher on the FTSE 100, as marginal as it may be, is certainly one to keep an eye on. When it comes to the Stock 600, though, a little bit of a different picture.
Right, yeah. So basic resources is the best performing sector, up by 0.7%. That iron ore price drifting a little bit higher, or more than drifting, up by more than 2.5% in the Singapore session. So Anglo-American, Glencore, Rio Tinto, all going a little bit higher, perhaps on that or related themes. Energy prices, interesting. We're moving a little higher on the oil price, up around 0.5% on Brent at 71.36. But energy stocks are moving lower, down by 0.5%, so not perhaps much to connect the two this morning. Utilities not doing too bad, autos and parts not doing too bad. Banks is one of the worst performing sectors along with media, but we're not moving all that far. Very quickly this morning would be the main headline. The stock 600 up by 0.1% this morning.
I'm dipping into the FTSE 250 to try and find some action. It is up by 0.2%. In terms of where we're seeing some downside, Dr. Martin, the lead loser in that space this morning. I draw no conclusions as to what is happening there. The market's basically just looking for a catalyst. It's hard to tell at this point what it is going to be. Mark Cudmore certainly was flagging the fact that it's going to likely be the Treasury the Treasury Secretary that is going to define ultimately how markets move at this point. We're really waiting to see what that appointment is going to do to markets. But there are other things going on. The FCC I thought was really interesting in terms of that narrative as well when it comes to how some of the big tech stocks are going to trade. What happens in terms of the data? Did you see the Empire manufacturing data on Friday? Super strong. Questions being asked about whether inflation is re-accelerating. There's a lot of survey data out this week of the United States. Here in Europe, are we going to see UK inflation providing a catalyst? It kind of feels like we know what the answer is going to be. Slightly stickier inflation coming our way.
And perhaps justifying then this cautious approach to rate cutting. That seems to be the latest mantra we've had coming through from the Bank of England, certainly post the budget and people's shifting expectations around inflation impact that budget might have. So we'll certainly focus in on that inflation data in the middle of the week.
Yeah, it certainly is going to have a ripple effect. And I should just mention very, very quickly, we are actually seeing a little bit of divergence when it comes to the pharmaceutical stocks and the healthcare stocks as well. Novo Nordisk on one hand, then you have your AstraZeneca, Novartis on the other. So an interesting trade, maybe a couple of single stock stories in that sector.
We're struggling. We're struggling with single stock stories. We're struggling with indexes. We're going to get some clarity, I think, probably later on this week. Valerie is joining us around the table. Let's talk to her. She's just said
Rescue us.
There was mixed signals as to whether or not I should talk to you. I always want to talk to you. Of course I do. In terms of the catalyst, what could they be? In terms of order of magnitude, how should we think about sequencing what we are seeing this week? You've got a Treasury Secretary selection. Kind of how big is that going to be? You're going to see potentially a lot of Fed speak this week if they get behind Powell. How big an effect will that be? What impact is the survey data going to have? I'm trying to sequence and get a kind of symmetry of impact here. I understand the symmetry of how the impact is going to work.
Yeah, no, it's definitely a good question. There's a few catalysts on the horizon, one of which being the Treasury Secretary pick, which we really don't know when we're going to get. We hope soon, hope to have some clarity on that. But I really think that the big kicker is going to be these NVIDIA results that we get on Wednesday night.
How is that possible?
Just how big, NVIDIA is when it comes to the S&P 500. It's 25% of the year's gains. A lot of optimism at the moment around the NVIDIA results, given their two main suppliers were a bit more optimistic in their own results. So maybe we can get a bit of a boost to the equity market after that. But I think then it's all really down to the Treasury Secretary pick, right? Is he going to go for a pick that is going to, I guess, pose some stability to this market? Because it's not just that the Treasury Secretary will be overseeing the Treasury market. They'll be basically conveying a very private reason to Trump, essentially trying to say to him a yes or no on his spending plans, right? Like they will be trying to tell him this kind of spending and this kind of Treasury issuance could really cause some instability, and that's what the market is going to take from this Treasury Secretary pick more than anything.
Yeah, and there's such a range of people we could be given here. Well, the end person, it's so unsettled, isn't it? Because some of them seem to be, firebrands and really with quite relative to Wall Street, maybe quite extreme views, and then others almost, darlings of Wall Street. So, could be a range of outcomes here. Still, let me focus in on that NVIDIA story again, Valerie, because I know at the end of the last, couple of hours ago of programming. In fact, Tom McKenzie was going through the day moves of NVIDIA on and what that looks like in relation to the S&P. And what's interesting is for a stock that has so much influence and so much impact at the larger scale, so, you know, it's a quarter of S&P gains, for example, this year, actually on the day, it doesn't necessarily set the tone for the S&P, which I think is a really weird sort of contrast.
Yeah, it hasn't always correlated with broader gains on that day. But look, Anna, the outlook for the chip market is going to drive very much where the equity market goes from here. You know, not just NVIDIA, but the broader Mag 7 stocks and what they mean in terms of AI demand, chip demand. I think it's still going to be a very important way forward. Maybe not on the day because, hey, we could get the Treasury Secretary pick on the same kind of day, and the market reaction muddied from there. But it's going to be a key highlight for the markets the Wednesday night after the bell NVIDIA earnings.
Can I provide a counter to that, which you actually pointed out to me, that Walmart earnings are coming a day before NVIDIA? Then you've got, I think, John Deere, you said as well. I mean, these to me are kind of bigger bellwethers for the U.S. specifically than maybe NVIDIA is from kind of an economic data perspective. Do you think that could change the game, or at least maybe the narrative around that U.S. consumer story?
Well, Walmart being the biggest employer of Americans nationwide, not only that, we also get Lowe's and Target, and as you mentioned, John Deere. So a good bellwether perhaps on the U.S. consumer, but a lot of this goes to the fact that survey data we've gotten recently has been a bit more positive. You know, look at the small business optimism surveys that we got, showing that there is a bit more of a rosier outlook now that we have the new Trump administration to take the White House in January. So perhaps we see this kind of optimism also when it comes to those consumer discretionary earnings we get this week. You know, my favorite stat of last time was that last time Trump took the White House in 2016, we saw the biggest 3 months gain in small business optimism that we had seen in 40 years. So a lot of this positivity for business that could drive. Maybe we'll see that in the PMIs on Friday, Guy. We get global PMIs on Friday. Perhaps they show more positive impulse in the U.S. and a more negative impulse in Europe because of the overhang of tariffs.
We've got a whole bunch of them this week. There's a whole load of survey data out that we need to watch this week. Pretty though, to your point about kind of the John Deere bellwether, I think it's interesting. If you think about kind of where money is being spent right now, it is in data centers. It's that kind of core infrastructure stuff that people are talking about. That's the kind of, if you think about NVIDIA as a bellwether for the US economy, this is where the spending's going. It's kind of the supply chain story, I think, is really significant in terms of the way people are spending money and employing people around the U.S.
It's a supply chain story. It's also a Trump pick story. And I think that one's, we could talk about it in the Treasury Secretary piece. But in the last 48 hours or so, we also heard about the new Energy Secretary, the new FCC chairman. That all shows up in the agricultural sector. That all shows up in the energy sector. And John Deere may have some comments around that as well.
Let's just get some breaking news lines coming through around HSBC, shall we? Because this just dropping on the Bloomberg terminal. We're getting a red headline that says that HSBC is going to be asking hundreds of senior managers to reapply for their jobs. They're likely to announce job cuts in the coming weeks. I think we saw some of that coming. Of course, new management over at the business under the hands now of George El-Hedri. Excuse me. Specifically, what they're talking about here is those staff who've come from the commercial banking division having to go up against people from global banking and markets as they combine these two parts of the business into a combined CIB division, and so as a result, having to reapply for those jobs.
I also heard, this is by no means in any way connected, that HSBC is slightly concerned that its new headquarters, which they're building just down over the road or revamping just down over the road, is already going to be too small. So as they move out from Canary Wharf back into the City of London, that the headquarters are going to be too small. But it's interesting that this is happening at a time when competition in the banking space for talent remains absolutely fierce. But it's interesting how this story is progressing in a kind of slightly city-like way as they combine divisions and ask everybody to compete for their jobs. Core 6 looks a little bit like this. This is how we are trading this morning. It is a quiet morning, to say the least, when it comes to the stock story here in Europe, and the Core 6 reflecting that to a certain extent. What I think is interesting, though, to Gritty's point, is what's happening in the healthcare space at the moment. But look at ASML and Schneider, both two AI trades, both trading softer this morning in a week that's likely, as Valerie says, that's going to be dominated by NVIDIA. Let's get some other stock-specific stories. Here's Joe Easton.
So the best performing stock today actually in Europe is Melrose. Now this one had a trading update just before the open. Now they've reiterated their guidance. This is an engineering firm in the aerospace sector. They recently had some concerns around cash flow in their partnership business with other engine makers. So it looks like they're reassuring investors today and spurring a decent gain for that one. As I say, the best performer on the SXXP this morning. Then in terms of UniCredit, we were waiting for a potentially delayed price on that one at the open, but there it is, down 2%. Now, remember, reports over in Italy at the weekend that the Del Vecchio billionaire family could be looking to offload their 2.7% stake following them buying a stake in Monte Paschi, rejigging their investments in Italian banking, according to those reports, potentially on that one. Then staying in Italy, we've got the NL numbers, that increased buyback, and also that deal for the hydro business of Acciona over in Spain. We're seeing Acciona rising a little bit up in Madrid, up around 3% at the moment. Actually, NL's numbers actually seeing a little bit of a decline in that one, despite that higher dividend, potentially a little bit of a surprise there. But Acciona getting a boost in the Spanish market today. Then in terms of Kering, potentially we will have a new leader at Yves Saint Laurent. That's according to a Bloomberg exclusive. A little bit of a gain in that one, not too much of a move, but remember that is the second largest unit of that company behind Gucci, which needs the big turnaround for that stock. Then in terms of the home builders, we had some numbers from Rightmove overnight. Now house prices did decline by more than 1% in November, some people pointing to potentially weakness following the budget and jitters around the UK policy in terms of housing as well. So we were seeing a little bit of a dip in those. We have not got a price on those, but take my word for it, they are slipping this morning. Finally, in your ratings, we've got ASR Netherlands. This is in insurance, gets a buy over at UBS following a massive share buyback recently at that company, returning more cash to shareholders. And then the other one over in Amsterdam is a hold delays, the grocer, another buy. This one over at HSBC. That's following cost cutting in their latest report. Both of those stocks rising today in Amsterdam.
Okay, thanks so much, Joe. Joe Easton from our equities team with a look at some of the stocks that are on the move. 12 minutes into our European session then. And the broad picture for European stocks is that we are a little bit weaker, down 0.1% on the Stock 600. The FTSE and the DAX outperformed slightly. The CAC 40 down 0.1%. When we come back, we'll talk about equity markets, European equity markets, where they go from here. What's at stake with the Trump presidency? More on that shortly. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Or other authorities
Could face bigger
accounting.
Listens next.
It was going to keep reading World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
We are 60 minutes into the session, 60 minutes past the opening trade. Equity markets are looking for a catalyst this morning. Certainly, let's talk about what that catalyst could be. Wolfgang Rothberg, equity strategist, equity strategist Jay Safra-Saracen, joining us out of Zurich. What are you looking for this week? At the moment, we are waiting. We are sitting on our hands. We are looking for a catalyst. What do you think that catalyst could be?
Well, I guess like 4 points probably, which are relevant this week. We have some data on the inflation side in the US. We have the PCE. We have PMI data towards the end of the week, which will definitely be relevant. We've obviously seen quite a resurgence in the numbers on the ISM, for example, in the US over the past months. If this is being confirmed, the US cycle basically keeps pushing higher. European numbers obviously will be important here as well. We've seen macro surprises turning positive again in the euro area. All these factors are relevant. And then on the political side, confirmation of a Treasury Secretary name of a proposal by the president. That's something which could have an impact here, given differing positions, in particular on trade, which the market may be pricing for. And then we also have NVIDIA earnings, obviously, this week, which is always a market-relevant earnings number, where we wouldn't expect much of a surprise, to be honest, saying basically they should continue to guide fairly positively, tell us that there's more demand than supply, but definitely a data point the market will be looking out for.
Back end of last week, equity markets start to fade the Trump move. Does anything that you've just laid out stop the market continuing doing that?
Well, I think if we get some more positive numbers on the macro side, obviously that would help, and in particular on the PCE number, we have seen the CPI number coming in above expectations. Same goes for the PPI, in particular on the core. If that were to be reversed, let's say on the PCE, then the market would receive some assurance, let's say, that inflation is not coming back immediately, saying basically it's all about the December rate cut. We've heard from Chairman Powell, obviously, that he's now putting it into the balance, saying it's not entirely assured that this rate cut will happen, but the PCE number could here, shift the either way. So definitely something which will be relevant. And I think if we just look at the market moves over the past few weeks, rates have become increasingly relevant, with the equity market being a bit scared, I think, that rates may start to overshoot again to the upside and weigh on valuations, which are quite rich in the US in particular.
Okay, well, that's interesting. Let me think about other impact that we could see stateside, and that is around tariffs. You mentioned in your notes that it's difficult to quantify, of course, what the tariffs are going to look like, but they could be more moderate than 2018. I'm interested in how you get to that conclusion, given the promises from the incoming Trump administration on tariffs have been greater in scale than we saw back in 2018. So how do you manage to take that sort of slightly more positive, optimistic, perhaps, view?
Yeah. Number one, rerouting of trade routes or supply chains, let's say. We know, for example, that the imports out of China into the US, they've fallen from around 22% of US imports to around 14% since the let's say the 2017-2018 era. Which just goes to show that companies have been eager to relocate to go into territories which are more, let's say, which the US is more tariff friendly to, which would just limit the impact of higher tariffs on US earnings here. And we know a lot of these imports are obviously US companies produce products in China going into the US. That's definitely one factor. Other factor is we know the Trump rhetoric is typically, bar very high and then in slightly below that. We're talking about the Treasury Secretary. We've heard that Scott Bessent is one of the favorites here. I mean, he has written an op-ed saying that this is probably the maximum position which has been put out. So saying at the end of the day, it really matters, in terms of like what we're actually getting. And the third point is on the general tariffs globally. This is something which can probably not be easily justified with on national security. Have to go through
Wolf,
Congress to
I'm going to have to jump in. Wolf, thank you very much. Thank you for your thoughts. I'm so sorry, we're having some problems with the camera, so I'll just jump in there. But thank you for your thoughts. Worth sticking with the conversation for as long as we could. Wolfgang Rotberg, equity strategist at J. Safra Sarasin, thank you very much for that. Let's pivot from one area of policy that President-elect Trump will have a big say on and set the tone for to another. The US has lifted restrictions on Ukraine's use of some Western-made long-range weapons to strike military targets within Russia. Russian forces launched a 120-missile barrage, meanwhile, at Ukraine over the weekend, striking energy infrastructure. Bloomberg's Bill Farries joins us now with more. Bill, let's talk about the lifting of these restrictions then by the current US administration. What could that mean, while we all wait, of course, for a new president to arrive in the White House? What could that mean for the conflict?
Well, it's a request that Ukraine has been making for months, and I think there's going to be a lot of questions about why the U.S. took so long to respond and give them approval to use these longer-range missile systems called ATACMS to launch strikes deeper within Russian territory. Those systems have been inside Ukraine and used by Ukraine's military since last year, but they were only authorized to really target some of those border regions that Russia has been occupying since the early days of the war. They haven't been able to use them to go deeper into Russia. So this is a game changer in that sense, but whether it will really change the course of the conflict at this point, particularly with Donald Trump expected to be inaugurated 9 weeks from today, is a big question out there. But it does give Ukraine some new tools to try to at least stave off Russia's advances and try to secure some of the territory that Ukraine has grabbed from Russia over the course of the year.
Bill, there seems to be a narrative increasingly that I'm hearing increasingly that Europeans are pretty much on board with the idea that we need to end the war and end the war reasonably quickly. Is that changing the narrative when it comes to communicating with Zelensky?
Well, I think that's absolutely the case. I mean, we're seeing that, German Chancellor Olaf Scholz spoke with Vladimir Putin. That was the first communication at that level between Putin and the West in about 2 years. We know that we expect that today Turkish President Erdogan in South America for the G20 is going to put forward his proposal that would essentially call for a truce in the Russia-Ukraine war, but leave kind of the battle lines where they are for the time being. So there is this increased momentum, and I think a couple factors are playing into that. One, of course, is Donald Trump's inauguration in 9 weeks. And the other, the fact that this war is getting even more international. We have about 10,000 North Korean troops preparing to join Russian troops in battle, and some intelligence reports suggesting that North Korea could be prepared to send as many as 100,000 troops over time into this conflict if it drags on. So I think that is raising a lot of alarms and making a lot of leaders think, let's find a way to wind this down over the coming year and not have it continue on indefinitely.
Well, great stuff. Thanks very much indeed for the updates on what is happening here when it comes to Ukraine. So EU foreign ministers are actually arriving in Brussels right now, looking to discuss that situation in Ukraine. They're, of course, going to discuss what's happening in the Middle East. I suspect that the Donald Trump presidency is going to be a fairly significant factor here as well. The Spaniard, Josep Borrell, who is, of course, the High Representative for Foreign Affairs for the EU, is currently speaking. Let's take a quick listen to what he has to say. Or not. It does seem as if we are maybe struggling with a little audio. There it is. Let's take a listen.
Taking days and weeks and months to reach agreements in order to act. So my last call to my colleagues will be more united, take decisions quicker, events don't wait for you. Russia is not stopping the war because you are thinking about it. Every time we took decisions in order to support Ukraine, it took too long. Every time it was a hesitation. Should we do? Should we not do? The war continues raging. Ukrainian people need more support. We have to provide this support, stop discussing, and start acting quicker. I am sorry that maybe I will not be able to make my last proposal about the European peace facility, but I still have a hope. Then the situation in the Middle East is, there is no more words. I exhausted the words to explain what's happening in the Middle East. The Secretary General, the Undersecretary General...
Speaking in Brussels, we're also getting commentary on the economic front from another Spaniard critic, De Guindos.
We are. We're getting some headlines there. The ECB's De Guindos talking about basically what we've been talking about. The risks have shifted from inflation to growth, and a lot of this has to do with trade tensions that could potentially be rising. This is a comment that we've heard not only from our markets guests, but of course from world leaders as they kind of recalibrate after the U.S. election. It's going to be a lot that comes out, of course, out of that speech in Frankfurt. That's where he's making those comments. As we get more headlines out of Brussels, out of Frankfurt, from the ECB and the EU, we will, of course, keep you apprised. Markets mixed at the moment. Stick with us. This is Bloomberg.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but we can't say that in Bloomberg.
Maybe moxie.
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. Nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I think we're ready. Go.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Welcome back to the opening trade, 8:30 here in London this Monday morning. Fairly quiet in terms of substantial news flow, but there's a lot to look ahead to. European equity markets, though, managing to turn something around into eking out some positive territory. The Italian market really does underperform today. The banking sector, a little negative there. But elsewhere, we see some flat to positive performance. Nasdaq futures, interestingly enough, up a little more than they were, up by 0.7% now. Let's think about tech, because NVIDIA is reporting this week. It's been a massive driver of US stock gains this year. How will the momentum in the tech sector fare into the year end and beyond? With us now for an exclusive interview, Dan Draper, CEO of S&P Dow Jones Indices. Dan, very good to have you with us. And we thought we'd start our conversation thinking about what tech means for markets broadly at this point, because NVIDIA was so much the story of the first half of the year. Then we saw some broadening, a lot of talk about broadening. Then we add into that some Trump themes and things get a little more complicated perhaps. But what do we make of the momentum trade behind big tech at this point?
Oh, I mean, momentum has been a key factor. Momentum is up 44%, year to date, versus just under 25%, for the S&P 500. Momentum is quite powerful. If you think about when you have, we've set 51 all-time highs, for example, in the S&P 500 this year. Whenever you set an all-time high, there's a 92% chance the next month you're going to set another one, and even a 99% that at some point in the future you set. So momentum is quite powerful moving forward. But what's interesting, as you mentioned, if you think about those U.S. Employment numbers back in July, the momentum trade continues, but we've seen some real dispersion. So underneath kind of the swan who's sailing at the top, there's a lot of furious paddling down below. So you've seen since that mid-July employment number, you've seen small cap, so S&P 600, mid cap 400, and even things very simple like the S&P equal weighted, all relatively outperforming.
Yeah.
So you're now starting to see in the Trump trade you mentioned more dispersion.
Yes, I was going to say, so there was a lot of talk over the summer about whether we'd see the trade broadening out.
Yes.
And then, enter another Trump presidency or the prospect of it, and suddenly small caps are really on fire. So how much more of this broadening out trend is there to go? Or is that all TBC, depending on what we get from the White House?
Well, it's interesting. I think if you look at sectors specifically, so again, I'll pick the S&P 500, historically, dispersion among sectors is about 20, or I should say accounts for about 22% of the return, on it. However, since, the post-Second World War, dispersion in the month of November of an election year goes up to about 75%. So you see, if you will, the bets the market's making in the income administration. So we're seeing it, but you're also seeing a little bit of a tapering now several trading days later, a bit more mean reversion.
Yeah.
Can the index continue to go up if the market broadens out?
Well, we're currently seeing it is now. I mean, you're just taking different types of leadership, moving.
Yep.
I think what we're seeing, though, is seems the backdrop is still monetary policy. You've talked about it all morning.
Right.
But if we still have this on margin lower interest rate at some stage in the future, you do have, along with another good earnings season coming out of the U.S., for example, you still have some tailwinds that can support the broader market. But the leadership sector basis could be changing.
But so if the Mag 7 go down,
yeah,
are we confident that the market can still go up? That is just, you talked about momentum, you talked about the impact that they've had.
Yeah.
If they roll over, is it a zero-sum game that the rest of the market kind of produces a higher index if the rest of the market rises?
Well, I'm not going to predict the future, but what I can say is since mid-July, that's exactly what we've seen.
Yeah.
Right? We've been able to see, the Magnificent Seven, or even, the top 10 stocks, for example, in the S&P 500. We've seen leadership changing. So if you think about some of the policies that could potentially favor the small caps, the mid caps, smaller companies, which have really lagged for a decade, potentially having that opportunity. But that's a broader market rally. I do think monetary policy is going to be one of the key factors behind it.
You're talking about index makeup, and I can't let you go without talking about NVIDIA and the Dow.
Yes.
Two of Guy's favorite topics. I'm curious about that, what that does, though, to the appetite around this. If you put NVIDIA in the Dow, or in any other index that's creation, is that better or is that worse? And I ask this in the context of liquidity. I ask this in the context of exposure. What do you make of it?
Well, if you look, the S&P 500 has, multiple times more assets benchmarked or, in some investable product compared to the Dow. The Dow has an incredible historical basis, 128 years old. It was effectively a barometer back in the late 19th century, when you didn't have government statistics or other kind of financial market statistics, it was Charles Dow, the founder, just tried to get a barometer of the whole U.S. economy. So it has a historical precedence for us, but those 30 stocks, it's a much smaller universe compared to where you have kind of the S&P 500, but still, as a bellwether, being able to have the leading companies that are listed in the United States represented in that smaller index, clearly price-weighted, the stock price-weighted, not based on kind of market cap.
Yeah.
So I think it's there, but in terms of the bellwether barometer for U.S. equities, large cap equities, it's by far the S&P 500.
Well, there was a moment in history when Intel was the biggest player in the Dow, and for NVIDIA to now replace Intel, I thought was quite significant. But I asked this in the context of critics of NVIDIA who would say that this is a temporary rally, and that even though we are talking about this broader kind of AI spread in our everyday lives, we're not quite there yet. And so much of this, for NVIDIA's perspective, and I'm aware you can't speak to specific stocks, is really a function of just the hyperscalers, and that's the read-through, as opposed to NVIDIA being almost a stalwart or a pillar of kind of corporate America. How do you view that? To the critics that say this rally has gone too far and the indexes are over-indexed to NVIDIA, what is the better play, and is concentration risk really that much of a risk then?
Yeah, I mean, you said it initially, I'm not going to comment on individual stocks. That's not what we do, nor do we try to predict the market. What we try to do is have the Dow, which doesn't have as frequent, rebalancing or additions or subtractions, say, versus, say, an S&P 500. It really does reflect the criteria we publish on our website. It's clear to everyone. But I think those leaders over a longer time period that, again, provide this barometer with this kind of more select subset of kind of the S&P 500. And that's what NVIDIA does.
Dan, I'm wondering what innovation in the index space looks like right now. What are clients asking you for? What do you still need to provide for them so that they can prepare for what could be a really volatile time ahead with another Trump presidency? What's the focus when it comes to innovation on indexes?
Well, I would say it's not an innovation. It's been around for over a decade, but a simple, what we started our conversation was this concentration. A very simple way to diversify is to equal weight. So our S&P 500 equal weight index, again, which has been around and is outperforming, since that kind of mid-July time period that I mentioned earlier. It's simple, it's understandable, and that's where we're seeing. But beyond that, I would say we're seeing innovation in different areas. Wealth management, for example, personalization, Gen AI, as it works its way in, we have to prepare the underlying data that supports our indices for wealth managers, private bankers, and others who are now going to be thinking about building more customized portfolios. So it may start, with an S&P 500, for example, but from a tax perspective or from some other need that we all as investors have, this is the world we're moving into. So taking traditional indices as a basis, but having a much more personalized impact. You're also finding capital-intensive industries, banks, insurance companies who are managing their assets, for example, also finding they need to move quicker. They need to have Gen AI-ready data that they can then use to manage their own portfolios better and their capital better.
There's a perception at the moment that private markets are better than public markets. Why has that become the reality? And is there anything you can do, should do, will do to continue to push back on that?
Well, I would say, look, it's clear over the past 3 decades, you've had, for example, in the U.S., you now have less than half the number of publicly traded companies.
Yep.
Right? So we've seen and rise, with private markets. If you actually get to performance, it's difficult to say. The data, when you have something, in private equity that is predominantly a general partner, GP, and LP relationship, versus all the transparency, everything you see in public equities. And having the underlying data is not particularly robust in private markets. So therefore, being able to draw apple-to-apple comparisons, a lot of work, including investments we're making, are going in to make the data and the comparisons better, but we're still a ways off.
There is a perception coming into this that the Trump presidency is going to be lighter on regulation. Do you think public markets would benefit from lighter regulation?
I think, again, I mentioned sectors earlier, and I think, again, you're seeing that sector dispersion. Clearly, the bets of some sectors potentially could benefit, what you're saying, but others not. For example, we're seeing, again, using dispersion as an example, we've seen 119% dispersion, which is kind of a record level between a big underperforming sector like auto components. This is of our S&P 1500 composite, versus an outperforming, sector which is coming in. So now we're seeing this, this momentum trade, which has been on for a long time. The sector changes, are going to potentially benefit, but areas like, utilities, transmission, energy, potentially those areas that have been kind of highlighted as beneficiaries, versus others. Financials, steepening yield curve. We're now starting to see relative outperformance, since the July dates as well.
So one of the conversations here in the UK has been how pension funds can be enticed to invest in some of these British companies, but also just in the index broadly. And it feels like the FTSE 100 and other indexes, the makeup is at the core of that conversation. This is something you're familiar with.
Yes.
This is something that happens in the States in terms of kind of pension exposure. What advice would you give to the UK government, to the players involved that are trying to incentivize this?
Yeah, look, I think if you look what's happened historically since, the late, say, 2009, for example, on a global index, so our S&P World Index, for example, U.S. equities were less than 50% of that index. Today, the strong dollar, the momentum, the number of companies moving their listings to U.S. exchanges, from abroad. Now, U.S. equities are over 60% of a world index like the S&P World. So you're seeing this momentum trade. Clearly, many believe that the dollar is going to continue to strengthen or at least stay as strong as it is. But the liquidity and price formation in U.S. equities is very strong.
So what is the UK missing on that?
Well,
what do they need?
I think, and not only that, but I'd say the ecosystem, not only in saying cash equities, but look at the derivative markets, futures, options. That price discovery is taking place in the United States. So I think this is where you can, maybe a government pushing to try to get more buying or are you going to think about the pensioners who need the returns for retirement? Where can you find the value and look, particularly the relative valuations and things? It's hard to ignore kind of waiting, outside.
Dan, great to see you. Thanks for stopping by to see us. We really appreciate it. Dan Draper, CEO at S&P Dow Jones Indices. And a reminder, the Bloomberg LP, the parent company of Bloomberg News, competes with S&P Dow Jones Indices in providing data and information to the financial industry. Let's take a look at how some of these indices are doing this morning. Here in Europe, not much action. As you can see, the CAC is actually unchanged right now. 42 minutes into the session, we are going nowhere in France this morning. Elsewhere, it's hard to discern much action, but there's at least some. Basically, we're waiting for the next catalyst. We'll talk about that next. This is Bloomberg.
Suppose I want to buy a computer, but I want to have AI in my computer. I want to be really up to date. Do you have AI in your computers yet?
No, not yet, but it's coming soon. And we think this is going to be one of the largest transformations in the PC industry in decades. What will be possible starting this summer is to run large language models in AI PCs, which means that what today all of us are doing in the cloud, where you use any of the applications that you can, you will be able to do it locally. And what this means, which is why we think this is important, is it will be much better from a cost perspective, because running models in the cloud is expensive. It will be better from a security perspective, because you will be able to use the model with your own data locally without having to upload your data to the cloud, and you will be able to do it anywhere in the world. And also for applications where speed is important, where latency is important, you will be able to do it locally much faster. For example, in gaming, where the game needs any resource the computer have, it will be a much better model. So it's going to be a big change starting this summer.
At the same price, too.
Slightly higher price, but if we look at the increase of price versus the increase of value, not comparable.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Don't forget the fact that for the European Union to keep open the global trade is a vital interest. Yeah. And so we will not close the doors to a protectionist way. There are a lot of unknowns. What is clear to me is that the impact would be for both economies, both Europe and US. And this is a more reason, an additional reason to consider these things not as a given, but to start a conversation and cooperation, and this is what the European Commission will do with the new administration.
That was the EU Economy Commissioner, Paolo Gentiloni, speaking there about the potential impact of tariffs on Europe in an interview with Bloomberg that happened at the end of last week. Now, the topic of global trade is set to appear high on the agenda at the G20 summit in Rio de Janeiro. World leaders are expected to show unity on climate action and global trade rules, two areas threatened by US President-elect Donald Trump. Bloomberg's David Gura has more from Rio.
On the formal agenda for this G20 Leaders Summit are debates about climate change and sustainability, global trade and development financing. But there will also be some hard conversations about conflicts around the world, including those in the Middle East and Ukraine. Russia's President Vladimir Putin declined to come to this week's summit, and Vladimir Zelensky, the president of Ukraine, wasn't invited to attend. This summit comes at a time when the winds are starting to change when it comes to geopolitics and the global economy. And the G20 Leaders Summit comes on the heels of another gathering of world leaders in Lima, Peru, the APEC Summit. While he was there, President Biden sat down with his Chinese counterpart Xi Jinping for a one-on-one meeting.
We haven't always agreed, but our conversations have always been candid and always been frank. We have never kidded one another. We've been level with one another. I think that's vital.
Those two leaders last spoke in April by phone, and President Biden used this opportunity to stress how much the relationship has improved since he's been in office. There's now open communication between Washington and Beijing after 4 frosty years when Donald Trump was in the White House. Of course, Trump is heading back into power in the United States, and the uncertainty about what that means loomed large over that summit in Peru, just as it looms large over this one here in Rio de Janeiro. President Xi stressed that it's in both nations' interest for there to be a good relationship between the U.S. and China, but he said China would not be afraid to fight back if the U.S. crossed red lines. In Rio de Janeiro, David Gura, Bloomberg News.
Staying with trade, in the face of another Trump presidency, you might expect to see European countries trying to fast-track ongoing trade talks with other regions. But that might not be the case. In Europe, France is hoping to persuade Poland to join it in blocking a trade deal between the EU and Latin America's Mercosur bloc. Let's bring in Antonio Barroso, who's a senior geoeconomics analyst at Bloomberg Economics, who can think about how trade is being reshaped by the prospect of another Trump presidency. So thinking about this specific deal, so this is ongoing between Europe and parts of Latin America then. Why is this deal important for the EU?
So this deal is not so important from an economic standpoint. We have crunched the numbers, we did the modeling, and there will be moderate gains for the EU, but as a whole on the aggregate, it's not so economically important. But it is important from a geopolitical standpoint for 2 reasons. First, the EU needs to show that it can pursue free trade. right now there are tensions on the Eastern Front with the tariffs on electric vehicles coming from China. So you have some tensions, some frictions there. And soon you might have a trade war starting with the United States due to the election of Donald Trump to the U.S. presidency. So as I said, the EU needs to show that it can pursue free trade. And the second reason is that China is increasing its footprint in Latin America. It's a region that is rich in critical minerals that the EU needs to diversify away from countries such as China. So, as I said, from an economic standpoint, not much to gain, a little bit to gain, but the deal has a lot of political importance.
Well, talk to us about that political importance, specifically why the French are trying to block it. Connect the dots for us.
Well, I mean, I have one word for you, and that is farmers. That's the main reason why France is trying to block the deal. Actually, when you look at opinion polls in France, half of the French people don't know what the Mercosur-EU trade deal is. It's like foreign policy issues. People normally don't care about these topics on their daily lives. However, farmers do care. They are a constituency that mobilizes very strongly, that is able to put the tractors on the streets and paralyze roads and create a big headache for the government. Farmers particularly are complaining about one category of product, beef, because if you look at the modeling, actually some of the farmers will be probably able to benefit from the deal. But particularly in the case of beef, it allows for a higher number of imports of high-quality beef, which might hurt French farmers particularly, and that's why farmers are very unhappy about this deal, and that's why the French government, French President Emmanuel Macron and Prime Minister Barnier are mobilizing strongly and trying to build a coalition against the deal in the EU.
Antonio, great stuff. Thank you very much indeed. Antonio Barroso joining us from Bloomberg Economics out of Geneva. Interesting to see how the UK and the EU deal with the Trump presidency and whether or not it forces them further together. Let's talk about what's happening in Germany. German Chancellor Olaf Scholz has urged the Russian President Vladimir Putin to speak with Ukraine. On Friday, the two leaders held their first phone conversation in nearly 2 years. Let's get more from Bloomberg's Oliver Crook joining us out of Berlin. What do we know about this call? What was said?
Yeah, well, I mean, this was sort of out of the blue, I think, for many people to hear Olaf Scholz sort of breaking silence with Vladimir Putin. We reported this story on Friday before anybody else when we got wind that this conversation was going to happen. And it really seems to be very sort of odd timing, particularly since Olaf Scholz is not in, as we've been talking about for several weeks and months, frankly, not in a particularly strong position right now. So he spoke on the phone with Vladimir Putin for an hour. We understand from people familiar with the matter that they will keep an open sort of chain of communication. And again, this breaks a silence of, about 2 years for Olaf Scholz, and is really, I think, the only G7 leader to speak to Vladimir Putin any sort of time recently. There hasn't been a huge amount of blowback from some of the key allies, say the United States, the UK, and France, because allegedly Olaf Scholz sort of had given them a warning that he had the intention of doing this. Of course, Volodymyr Zelensky, it's a very different picture, who said that this is basically opening Pandora's box now, bringing sort of Putin into the fray. But it sort of speaks to, I think, the broader problem that you have here in Europe, confronting this idea of the Trump presidency coming up, that basically if they do not re-engage with Putin, this line that they have continuously said, no agreement on Ukraine without Ukraine, but if it's just Putin and Trump, there could be an agreement on Ukraine without Europe. So potentially now somebody to go forward and start to sort of feel the temperature from Vladimir Putin. To me, it's not exactly clear why Olaf Scholz is the right person to do this, given his particularly weak position and given the fact that he may not be chancellor for very much longer.
Yes, in the midst of all of that global geopolitics then, Ollie, we watched the domestic story in Germany unfold. Support for Scholz seems to be dwindling there, with the Greens picking Economy Minister Robert Habeck to lead them into the February election. Where does that leave Scholz?
Yeah, so Robert Habeck over the weekend got, 97% support of his party to lead him into the next election. We are starting to have some doubts from the SPD about whether Olaf Scholz is the right candidate going forward. Right now, within the SPD, if you're looking at this election on February 23rd, you're thinking to yourself, we have Olaf Scholz. Yes, he is the incumbent. Yes, he is the chancellor. Yes, he has been the leader for the last few years, but he is supremely unpopular. You also have in your party Boris Pistorius, the defense minister, who is not only the most sort of popular politician within the SPD, he is the most popular politician within Germany. This is a sort of title that is quite coveted when you go into a major election. Now, the SPD is going to officially put their official candidate forward on January the 11th, but as you can see from the polling, not within the party, but across Germany, 66% of people believe that Boris Pistorius should be leading the SPD into this election, while only 18% think that it should be Olaf Scholz. All that being said, the SPD currently still has closed the ranks, is supporting Olaf Scholz, though as we know in politics, particularly the last couple of weeks, if January 11th is some time away, and there is definitely a non-zero chance that Olaf Scholz will not be the candidate going in, though he still enjoys the support of the SPD right now.
All right, Oliver Crook, we thank you so much, of course, walking us through some of the German politics, some of the key players that we are keeping an eye on. In the meantime, let's talk about what we are going to be keeping an eye on in the week ahead. Of course, the G20 does begin in Brazil, in Rio, I should say. But it really kicks off the week of strong data, strong earnings on both sides of the Atlantic. We got Walmart earnings on Tuesday, NVIDIA on Wednesday, which is largely expected to be kind of the highlight of the week, but then plenty of data as well. Jobless claims, PMIs from the EU, UK, US, you take your pick. It's happening this week.
One thing that's not on there, Treasury Secretary. When are we going to get that news?
We couldn't attach a day to it,
No,
so it
precisely.
doesn't work in the graphic.
Yeah.
It hangs over the whole week, doesn't it?
It does.
The beginning
and the
of
market,
it, perhaps.
The market's on tenterhooks waiting to find out who it's going to be. So will that be something that eclipses all of what is on the screen at the moment, or do other factors such as the survey data that we're going to get this week, or those NVIDIA numbers or Walmart numbers, maybe eclipse that too? The market's certainly still got a firm focus on Trump.
It's just difficult to see CPI data, growth expectations, that sort of thing cutting through when we still don't, there's still so much about the Trump agenda that we really don't know. Those seem like the huge, big uncertainties that still hang over markets. It seems difficult to get excited by backward-looking data around prices, for example.
We just don't know what the tariff policy is going to look like.
Can I make a contrarian pitch, which is, will we know what the tariff policy looks like after we get this pick? Will we get any actual real guidance, or is this just one of those things that the market is focusing in on, but ultimately nothing changes?
It was a couple of years, wasn't it, during the first Trump administration before we got real clarity on what tariffs were going to look like, and that might not be a good guide.
But that was what Trump felt. He was frustrated in the last presidency because he didn't have his team in place, couldn't get off the ground quickly, didn't go for what he wanted to go for as quickly as he had hoped for. The expectation, look at what we're doing in terms of already filling positions, that they will hit the ground running and deliver quickly, and that certainly seems to be the hope and expectation coming out of the incoming White House team.
In amongst all of that, the market watches reevaluate Fed expectations as a result. And with that in mind, coming up later today, don't miss our interview with the former St. Louis Fed President, Jim Bullard. That conversation at 1:30 p.m. at UK time. A lot to talk about when it comes to shifting expectations about just how many cuts we will get from the Fed. Just where is the neutral rate and how close are we to it? That is it for the opening trade. The week gets busier from here, folks, that's for sure. The S&P the Stock 600, down 0.1% this morning. This is Bloomberg.
Show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Makes you wonder how politics might play out.
The countdown is on. Everything you need to get the edge at the end of the market day.
Today, I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Hi, I'm Laurie Haynes, CEO and co-founder of Shirar, and I'm really excited to tell you that we are going to be raising funds for Shirar again. After a successful raise in 2023, it's time to scale.
We hope that you enjoy the pitch deck and the financial model. Any questions, please don't hesitate to ask us, and we can't wait for you to be part of Shirar.
Big chunk of the equity market gains since Donald Trump's U.S. election win. Traders, I think, looking to fresh pointers on growth, but also the path for interest rates. So let's also go to cross-asset, look at what treasuries are doing, euro, dollar, and then a couple of the commodities that could be extremely interesting given what's happening in China. Concerns also are lingering about the president-elect's potentially inflationary economic policies. Attention now is on his pick for Treasury Secretary. So you can see some of the things we're watching out for. S&P futures gaining 0.1%. So the U.S. has lifted restrictions on Ukraine's use of some long-range Western-made weapons to strike military targets inside Russia. Well, President Putin's forces launched a 120-missile barrage at Ukraine over the weekend, striking energy infrastructure. So let's get more from Bloomberg's Kevin Whitelaw. Kevin, thanks so much for joining us. So what does this actually mean for the conflict going forward?
Well, I think it's going to be interesting to see just what this actually means. We do think that the change of targeting rules includes some limitations about exactly where Ukraine can use those weapons, and it's probably a more limited area than Ukraine would like. Obviously, Kyiv's interest is to try to figure out how to hit some of the Russian ammo storage facilities, as well as some of the areas from which these attacks on its own territory are staged. But it's just not 100% clear they're going to get the kind of leeway that they were originally hoping for.
So, Kevin, what does this, the new cabinet, we know that Donald Trump is going for loyalists, but there's a bit of a tussle for the Treasury pick. There's like, what, 3-4 candidates? Who could it be?
Well, I mean, I think originally we thought it was down to a choice between two, Scott Bessent as well as Cantor Fitzgerald CEO Howard Lutnick. But, they seem to have gotten into a bit of a scrap with each other, and that's the kind of thing Trump doesn't really like. He doesn't really like that sort of public jockeying and attention-seeking from the people that he's choosing. And so it does now seem that the search has widened, a couple of other names being thrown out there to the point where I'm not sure anyone knows what to think about any of it right now, other than the auditioning still seems to be a lot about showing loyalty to Trump, showing the ability to make Trump's case on television. And so I do think you're seeing a handful of these various candidates out there trying to find not so subtle ways to show that there'll be people who can go out and carry his message for him.
Kevin, how quickly do you think the appointment would come? And do we know anything about style? I mean, does he pick the secretary speaking to others, or is there an interview process?
Well, a lot of what he's been doing has been actually just watching clips of them on television and really trying to sort of see, hey, is this the person that I can envisage in this job and envisage out there defending my case to the American public? That sort of public-facing side, combined with just straight-on sort of loyalty, have been the most important things. I think he understands the Treasury pick is maybe a little different than some of his other picks. He's been always tied the sort of performance of Wall Street in closely to sort of, how he's doing, and sees that as an important measure. He does have a lot of friends and colleagues, sort of associates that are obviously deep in the Wall Street world as well. And so I think he knows that this pick is important to him and a lot of the people he knows. He wants to get it right. And so I think he's a little torn as he hears people talking about who might be best for the market versus who might be best for carrying out his agenda. And I think ultimately that's the choice he's going to have to make.
So interesting, Kevin. Thank you so much. Kevin Whitelaw there with the very latest, of course, on Ukraine and the potential pick for Treasury Secretary by Donald Trump. Now, let's also talk about the markets and how they've been reacting to some of the appointments. Let's get straight to Seema Shah, Chief Global Strategist at Principal Asset Management. Seema, thank you for joining us, as always, as we have a little bit of a clearer view of what kind of personality Donald Trump is going for. What does it mean for the markets?
Thanks, Francine. Great to be here. Well, I think we can't exaggerate the importance of that Treasury Secretary pick. If we look across a number of the things that the market has been concerned about, we think about what happens to tax cuts, what the implication is for fiscal deficit. We know that bond vigilantes have almost been signed together over the last couple of months. And then, of course, tariffs and what the inflationary impact of that is going to be. So I think the market is watching really closely to see how that pans out. I think there'll be a more positive market reaction, of course, if you were to have a candidate or at least a pick who is a little bit more skeptical about the idea of having significant tariffs being introduced.
Seema, if you look at, the market definitely rallied on the election of President-elect Donald Trump, and now there are many, many question marks about actually what happens next. What do they worry about the most? Is it a dollar rally that could also hurt emerging markets, or is it really tariffs and the resurgence of inflation?
Well, I think, the market recently, in the last couple of days, you've seen a slight shift. There's this renewed focus on what are the inflationary implications. We know that the market has really been, I think, encouraged over the last couple of months by the idea that the Fed is going to be cutting rates over the next coming months and into 2025 and, potentially into the late part of next year. The idea of tariffs being somewhat inflationary means that you could see a slower path for the Fed and, of course, an earlier end to Fed cuts. And the market doesn't want to see that. So I think that's the key thing that the market is really watching out for is what are the inflationary impact, how much tariffs going to be? And I think the fiscal deficit conversation is something which almost becomes more of an issue as you get into 2025 and certainly into the second half of next year.
So if we also look at deregulation, how do you build your portfolio?
Well, so it's a great question because, we've got all this, volatility concerns about inflation. And then if you take a step back, and we think about what has been the fundamentals, what's been driving the economy over the last couple of months, the markets over the last couple of months. As I said, there's Fed rate cuts, but it's also been the idea that you've got the soft landing coming into play and earnings growth has been positive. Deregulation is something which would reinforce the idea of a soft landing. It's why you've seen financials perform so well. So I think that is the other thing, and I think that that's part of the idea where the market is very clear that there should be some movement towards deregulation. And it's, I guess, the reason why, from our perspective, as you look into 2025, we're still expecting the equity market to do very, very well. We expect to be a fairly positive returns year in 2025.
Seema, when you look at some of the markets, I guess the market reaction, is there a danger that Donald Trump will want to do more because the market has already priced in some of the encouraging news that he said he would do?
Well, I think that is certainly a risk. And I think the market is really playing off that over the last couple of days. But it's important also to remember about history, what history tells us about elections. Typically, the market does shake off a lot of the election noise fairly quickly after the election. Now, I think this is a slightly different impact potentially because of the inflationary side of some of the policies that have been suggested. But I think that we do know that Donald Trump does watch the equity market very closely. he does want it to do very well. So I think that we almost can think of the market as a bit of a regulating force. If there's a negative market reaction, I would expect that you could potentially see a bit of a pullback in policies from the president-elect.
And Seema, very quickly, where do you expect dollar to go in this kind of environment?
Sorry, I didn't hear that.
Dollar, what happens to dollar? Because, I mean, this changes everything for emerging markets. Are we going to see a dollar rally, or will President-elect Donald Trump trying to keep it low?
Well, so we've heard from him over and over again over the number of years saying that he prefers to have a weak dollar. The truth is, though, is that if you have got any kind of inflationary type of policy, anything which is going to create U.S. exceptionalism or at least exacerbate U.S. exceptionalism, the chances are that you're going to see a strong U.S. dollar. So there are certainly risks for emerging markets. We need to see how, of course, China plays out. What is there going to be their stimulus plans in not exactly retaliation, but in response to what's coming out from the U.S. So generally speaking, we are expecting U.S. dollar strength. Valuations are very, very high. So we're somewhat skeptical about how much further you could see the U.S. dollar appreciating from here.
Seema, thank you so much. Seema Shah, their Chief Global Strategist at Principal Asset Management, stays with us. We'll talk a little bit about the UK and Europe next. Now, Bloomberg has also learned that members of Donald Trump's transition team have told advisors they plan to ease U.S. rules for fully self-driving vehicles. Now, if the new rules enable cars without human controls, that would, of course, directly benefit Tesla Chief Executive Elon Musk, who's become a very powerful figure in Trump's inner circle. So on the back of that, you can see Tesla gaining some 7.5%. Now, HSBC has also asked hundreds of managers to reapply for jobs in the firm's newly formed corporate and institutional banking division. Now, this comes as the chief executive, George El-Hedary, continues his hunt for ways to make the bank more efficient. Well, Bloomberg has also learned that interviews are already underway. Sources say the process will result in the British bank beginning to dismiss several hundred managing directors and other senior bankers in the coming weeks. So coming up, we'll have plenty more, of course, on some of these big stories. Also, China's Xi Jinping tells President Biden he's ready to work with Donald Trump to improve the relationship between the world's biggest economies, but with a warning over decoupling. We'll discuss that next. And this is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Politics to the world of business. Joe Matthew and Keely Lines deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg. Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Now, world leaders are gathering in Rio de Janeiro this week for the G20 summit. Among those attending, of course, U.S. President Joe Biden and the Chinese leader Xi Jinping. Well, Xi told Biden that he's ready to work with Donald Trump to improve the relationship between the world's biggest economies. Now, Xi also used the meeting to lay out a warning on China's red lines. Well, Bloomberg's Katya Dmitrieva joins us now. Katya, thank you for joining us. So what are these 4 red lines, and what do they say about the relationship between the U.S. and China going forward?
Well, the 4 red lines are not necessarily new, but when Xi and Biden met over the weekend, it was sort of a chance for these leaders to lay out what they hope will be a blueprint going forward. And these 4 red lines, and I'm paraphrasing here, but it's do not interfere in China's economy or try to limit economic growth, do not interfere in Chinese politics and governance, do not try to bring democracy, and of course the Taiwan issue. Do not try to address the Taiwan issue. Nicholas Burns actually spoke at a conference last week here in Hong Kong that I attended, and he said that the relationship between U.S. and China is inherently competitive. So hearing those kinds of things and these 4 red lines being reiterated in a sense from Xi, it's clear that tensions in this relationship will probably just continue going forward, especially under President Trump.
Yeah, Katya, I mean, the thing is geopolitics seem to be, of course, the #1 thing on the agenda. But at the same time, Donald Trump is not there. So how will they navigate that? Do they actually need to wait, mid-January? I think inauguration is like January 21st to then really talk about what happens next.
Yeah, that's right. Trump a little busy at the moment in the United States, kind of holding this job fair for a Treasury Secretary, as we talked about earlier in the program. I think once Trump comes in, once he starts announcing policies, obviously there will be something to work with. But I don't think that should discount what happens at the G20. These kinds of global events are really a chance for leaders to meet each other, exchange cards, and kind of have these trade deals and potentially announce, make some new announcements. Last year at the G20, the U.S. and EU supported or released this initial support for a corridor between the EU and the Middle East and India. So, these kinds of meetings are a good chance for these new relationships to be formed, and especially on the trade issue. This is the #1 thing ahead of the election that everyone from markets to economists have been trying to game.
All right, thank you so much, Katya, with the very latest, of course, on some of these extremely important multilateral meetings. Now let's get back to Seema Shah from Principal Asset Management. Seema, again, I guess, these tariffs and this possible trade war, not only fragmentation between the U.S., but also China. What's the right way for China to react? And is this, the China economy is also a concern because of the real estate sector. So how much do they need the U.S. at this point?
I think, for investors who have been looking at China over the last couple of months, they've all been waiting. What is the fiscal stimulus plan going to be just to reset the China's economy from its own domestic issues? Once you start to throw in the potential of a trade war with, potentially 60% tariffs, it reinforces the very urgent need, I think, for China's policymakers to really step in with that fiscal stimulus. Now, there's been positive market reaction, I think, after the initial ideas that there would be some kind of stimulus measures coming through. But for that to be sustained, or if it's almost to come back at this point, we do need to hear some kind of action. And I think the trade war is one of the reasons why you're seeing investors holding back at this point, just to see exactly how is China going to respond, what are their plans going to be in play just to reset their property market, and then also to counteract the impact from tariffs.
Are you expecting more of a bazooka coming from PBOC and others because Donald Trump is in the White House and we don't really know what he does in terms of fragmentation and tariffs?
Well, I think what we're starting to see is that China's policymakers are waiting to hear exactly what Donald Trump is going to be introducing. And that suggests to us that you're not going to see a bazooka. That cautious pace is something about stabilizing growth rather than completely turning China's economy around. We had that sense for the last 2 years, and certainly that comes through even further now. But it probably does mean that they need to increase the fiscal stimulus more than what they had initially been planning, given that we now do know that there's going to be tariffs coming in some level in 2025.
Seema, is there a danger that we're so preoccupied by what the U.S. does that we forget some of the underlying, issues or even strengths of the EU and the UK. So what do you do with these two regions?
I think it's a really difficult case for next year for Europe, more so certainly than the UK. We know that there's a chance of tariffs on Europe, but also they really do sit in the crosshairs of anything to do with China. So China's weakness is certainly going to impact Europe. And then, of course, as you were mentioning before about the geopolitics, Europe is really in a vulnerable position in terms of what happens with the Russia-Ukraine war, but also with regards to NATO funding. They would have to step up that funding at a time where European governments are already struggling with their own deficits. So I think it's actually quite difficult to make a strong case for Europe in 2025. It's one of the reasons when you look across the world, we have a significant preference for the US, but certainly even emerging markets stand up in front of Europe as we look to next year.
Seema, thank you so much. Seema Shah, their Chief Global Strategist at Principal Asset Management, joining us, of course, on all things G20 and all things Donald Trump. Now, coming up, Germany's Greens have picked the Economy Minister, Robert Habeck, to lead them in the snap election. We'll have the latest on what that means from Berlin. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Now, Germany's Greens have picked the Economy Minister, Robert Habeck, to lead them into February's election. This comes, of course, as support for the Chancellor, Olaf Scholz, from his party weakens further. Well, Bloomberg understands some members of the SPD would prefer Defense Minister Boris Pistorius to lead the campaign. Let's get more from Bloomberg's Ollie Crook. Oliver, thank you so much for joining us. So what do we know about Olaf Scholz's call with Putin?
Yeah, so listen, Francine, the call with Putin came, I think, as a surprise to many people on Friday, and actually Bloomberg broke the story once we started to get wind that this was going to happen. But what happened was he spoke for an hour-long phone conversation with Vladimir Putin. We understand that afterwards there's going to be sort of an open channel of communication. We've heard the reaction from Volodymyr Zelensky, the president of Ukraine, none too pleased about the fact that this call happened, saying that basically this opens up Pandora's box. The resistance and criticism has been a lot less harsh from the likes of other key allies like the US, the UK, and France, potentially because we were told that Scholz had given them a heads up they would have this conversation before he actually made the call. What I think is interesting is, why is Olaf Scholz the one making this call? He's one of the first G7 leaders to speak to Vladimir Putin over the last 2 years, really breaking some of the silence and isolationism at a time when Olaf Scholz himself is not in a particularly strong position. And Olaf Scholz, in his entire time in the Chancellery, has really been reticent to take a leadership role in Europe and on the global stage. So it comes at a little bit of an odd time. But what I think it highlights, Francine, is this dilemma that the Europeans are feeling. What they keep saying is that no decision should be made about Ukraine without Ukraine, alluding to the fact that Donald Trump may speak to Vladimir Putin. The concern for Europeans increasingly is that decisions might be made on Ukraine without Europe, which is why potentially now trying to get a temperature read from Vladimir Putin, from Olaf Scholz, and really sort of this dilemma that Europe has to really try to get a seat at the table if there are going to be negotiations going forward under Trump.
Ollie, Germany's Greens have also picked the economy minister, Robert Habeck, to lead them into February's election. So this comes as support for Scholz from his party weakens further. Like, what do we know about what happens in February?
Yeah, so listen, so the SPD has two choices right now. They have their incumbent candidate, Olaf Scholz, and they have their defense minister, Boris Pistorius. Overall, we should say that the SPD is not going to be very likely to change these candidates very clearly, very swiftly. It's going to be a very high bar. But right now, 66% of Germans think that Pistorius should be leading the SPD into election, not Olaf Scholz.
Ollie, thanks so much. Oliver Crook there with the very latest on Germany, our big story over the next couple of weeks. Now, coming up, we take a look at the controversy surrounding U.S. President-elect Trump's cabinet picks. That's next, and this is Bloomberg.
In case you missed it on Bloomberg Technology.
We are very focused on playing one game and one game only, and that is being free, frictionless entertainment for consumers. But what I will say is we are doubling down on the strategy. We believe it's working. We think the tailwind's in our favor, and it's on us to continue to deliver.
Whenever you're doing something innovative that hasn't been done before, there's a lot of trial and error and iteration. It just always has these zigs and zags along the way, and I think where we've been successful is really being reactive.
Hollywood is the history of technology. Like, we are here because of a technological breakthrough, right? And so we sometimes forget that art and technology kind of like come together always. And for us, it's like this redefine a little bit the technology. Again, if you understand AI as a tool for humans, then it changes the narrative. And it's less about fearing it and more about embracing it.
Don't miss Bloomberg Technology, live every weekday.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Or other authorities
could face bigger
your challenge listens next.
It was going to keep rain World Cup. This is a 3.
As the economic picture
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Athens, and these are your top stories. The U.S. gives Ukraine the green light to use long-range missiles to strike some targets in Russia to defend itself from attacks from Moscow. The search for Donald Trump's Treasury Secretary is in disarray as contenders tussle for support, with infighting spilling into the open. Plus, HSBC asks hundreds of managers to reapply for jobs as part of the new chief executive's efficiency drive. Now, a couple of things we also watching out for. Liberty Energy actually jumping as much as 36%. This is as Donald Trump has picked the chief executive as energy secretary. Now, I have to say the concern is that a lot of the appointments by Donald Trump will personally benefit because of the companies that they have. So something to watch out for in case there's any pushback. But for the moment, Liberty Energy getting some 30%. Now, the fight over Donald Trump's chief economic policymaker is definitely heating up as business leaders, billionaires, and Wall Street executives are all pushing the president-elect to choose their preferred candidates to lead the Department of Treasury. Now, over the past few days, the president-elect has also picked a number of loyalists to take up prominent roles in his cabinet. So let's get more from Thomas Gift. He is the director of the Center on U.S. Politics at University College London. So, Professor, thanks so much for joining us. So help me make sense of all of this. First of all, given the pick so far, do you have a clear idea of what happens to policies, but also what kind of people the president-elect wants to put in his cabinet?
Well, I think if there's one word that describes who Donald Trump is putting in his cabinet, it's loyalty, or maybe more accurately, fealty. I think Donald Trump really perceived that the mistake that he made in his first administration was putting in inside the Beltway types, Washington insiders, kind of status quo, bureaucrats and other high-level officials who had spent their career in the nation's capital. He is determined not to make that mistake again. And I think, this time around, some of his picks were even surprising Republicans. He was telegraphing the kinds of individuals that he wanted to put in these high-level positions, from Elon Musk to Vivek Ramaswamy to Pete Hegseth. But yeah, it's quite something still.
Yeah, I mean, what does it mean in terms of policy? Because I keep on hearing that Donald Trump will often listen to the last person that he spoke to, and that's his policy. So does his cabinet try and jostle for attention? Who does he listen to when it comes to getting decisions made?
This is a really big question about what Donald Trump is going to prioritize in his first 100 days. He's talked a lot about various policies, tax cuts, tariffs, and so on that he wanted to achieve over the course of his presidency. But we know that U.S. presidents really only get a few months when they come in with a mandate to get these positions. So I think that it's certainly the case that there's going to be a lot of jockeying for who has Trump's ear. Right now, it seems to be Elon Musk. I mean, he is playing a vital role in even the selection of the cabinet picks and others who are going to be around Donald Trump. So that could always change. Of course, we know that Donald Trump's ego, when it butts up against some others, has a tendency to kind of combust. But for right now, I think I'd look what Elon Musk is doing. I think that he's a pretty good bellwether.
Thomas, in terms of Elon Musk, so I think Tesla is gaining pre-market because he's close to the president, and that could give him advantages in terms of like self-driverless cars. The other story is Liberty Energy. That's also gaining 30%. So this would be cabinet members almost directly benefiting, or their companies directly benefiting of policies. Are there going to be checks and balances?
Yeah, that's a great question. And I think that it's reasonable to ask, simply because so many individuals who look like they're going to have high-level positions in the Trump administration do have these vested interests in finances right here domestically, and also vis-a-vis some other countries with trade in China and so on. And I think that there needs to be some oversight, but whether there will be or not is a big question, because a lot of these decisions are ultimately going to be made by the executive branch. Again, that's going to be dependent on who has Trump's ear. Whenever you talk about subsidies, for example, for electric vehicles, even if subsidies don't directly pour into the coffers of Tesla, for example, you could actually see the opposite policy where sort of subsidies are removed, but that sort of solidifies the position of Tesla as sort of the car manufacturer of electric vehicles that is the most dominant.
There are many question marks on who the president-elect has chosen for, the Department of Education, on what he wants to do with the Department of Education, and where he puts that health. I mean, will all of these recommendations or all these cabinet members really be confirmed?
Well, that's a big question. I think that two individuals are unlikely to be confirmed. Pete Hegseth and Matt Gaetz, or at least I should say that there are big question marks surrounding them. With Matt Gaetz, of course, he's facing a House ethics investigation. There's a big question right now going on in Congress about whether the results of that are eventually going to be released. Even if they're not, though, it's very likely that we'll see some type of leaks. And regardless, I think many sort of are asking whether he has the background and the expertise and the wherewithal to kind of fulfill that role. But we know with Donald Trump, it's really all about loyalty. Again, I think it kind of goes back to this. With the Justice Department in particular, there's a litmus test. That individual is going to have to shut down the criminal investigations that Donald Trump is under. And I think right now he's picking his guys.
We also understand that Donald Trump, likes a deal, and that he'll probably try to negotiate country by country with Europe instead of going through the European Commission. Does that put European countries at loggerheads? And actually, what do you think is the best way, Professor Gift, to deal with the president-elect when it comes to tariffs, to not be punished? Europe is extremely vulnerable at this moment in time.
No, you're absolutely correct. Donald Trump promising upwards of 10 to 20% tariffs on all imports into the United States, tariffs of upwards of 60% on imports from China. That could have huge effects, not only domestically within the U.S. in terms of raising prices on consumers, but also have kind of ripple effects into Europe and the rest of the world. The U.S., of course, is the most dominant economy, and anything that is going to smack of isolationism is going to be a big problem. You're absolutely right, though. Donald Trump's go-it-alone, sort of unilateral America First foreign policy doesn't prioritize working through international institutions, and so it's largely going to be on a case-by-case basis. I think there may be some opportunities for exemptions from these tariffs. Donald Trump has done it before with Apple, for example, the U.S. company. But yeah, I mean, countries are going to have to make the case that removing tariffs is ultimately going to benefit the United States.
Thomas Gift, thank you so much for joining us, Director there of the Center on U.S. Politics at University of College London. I have a feeling, Professor, we'll be speaking to you a lot more, so don't be a stranger. Now, the G20 summit begins in Rio de Janeiro today. Leaders expected to show unity on climate action and global trade rules, two areas threatened by U.S. President-elect Donald Trump. Well, Bloomberg's David Gura has more from Rio.
On the formal agenda for this G20 Leaders Summit are debates about climate change and sustainability, global trade and development financing. But there will also be some hard conversations about conflicts around the world, including those in the Middle East and Ukraine. Russia's President Vladimir Putin declined to come to this week's summit, and Vladimir Zelensky, the president of Ukraine, wasn't invited to attend. This summit comes at a time when the winds are starting to change when it comes to geopolitics and the global economy. And the G20 Leaders Summit comes on the heels of another gathering of world leaders in Lima, Peru, the APEC Summit. While he was there, President Biden sat down with his Chinese counterpart Xi Jinping for a one-on-one meeting.
We haven't always agreed, but our conversations have always been candid and always been frank. We have never kidded one another. We've been level with one another. I think that's vital.
Those two leaders last spoke in April by phone, and President Biden used this opportunity to stress how much the relationship has improved since he's been in office. There's now open communication between Washington and Beijing after 4 frosty years when Donald Trump was in the White House. Of course, Trump is heading back into power in the United States, and the uncertainty about what that means loomed large over that summit in Peru, just as it looms large over this one here in Rio de Janeiro. President Xi stressed that it's in both nations' interest for there to be a good relationship between the U.S. and China, but he said China would not be afraid to fight back if the U.S. crossed red lines. In Rio de Janeiro, David Gura, Bloomberg News.
Now, as you just heard, Ukraine is high, of course, on the agenda in Brazil. Bloomberg understands that North Korea may also deploy as many as 100,000 troops to help Russia's war in Ukraine if the alliance between Pyongyang and Moscow continues to deepen. Well, Bloomberg's correspondent at large for Europe, Alberto Nardelli, is following the story. He's been breaking a lot of news for us, and he joins us from Rio de Janeiro at the G20. So, Alberto, 100,000 North Korean troops, even if hypothetical, could be a huge escalation. Can you give the figure a little bit of context?
Absolutely. I think the first thing to keep in mind is that we're not talking about 100,000 troops in one go. This would be about rotating troops in batches, and so you would end up eventually with North Korea's contribution as high as 100,000 troops. That detail said, it is a major escalation. The deepening alliance between North Korea and Russia brings the conflict to the Indo-Pacific region. There are lots of security concerns around that. There are concerns about what Russia is giving North Korea in return, in addition to lots of money. For this support, Western nations believe that China is uneasy about this deepening alliance too. And importantly, it is the key element behind the U.S. decision to allow Ukraine to strike some military targets within Russia.
So North Korea and Ukraine will be raised by several allies at the G20 summit. Alberto, what are we actually expecting? Is there anything that Europe can do at the moment?
So it's a very interesting summit because if you look at the formal agenda, the hosts, Brazil, have tried really hard to keep Ukraine and the war in the Middle East off the agenda. There'll be a statement that will cover both in 2 boilerplate paragraphs. But in terms of the more informal conversations, in terms of the bilateral meetings, the war is top of the agenda, and specifically this deepening relation will be raised by several G7 leaders when they meet others, including, for example, German Chancellor Olaf Scholz is going to raise this issue with Xi Jinping. On your question, what can people do about it? That's a very difficult question because nobody really knows. While China may be unhappy, will they actually do anything about it? The US has started to do something about it with the decision to allow these strikes, and those are specifically focused on North Korean and Russian operations in the Kursk region. Obviously, there's a big change coming in the White House, so we don't know what the policy will be in a few months. In terms of Europe, they're still discussing whether they will follow similar US policy changes, and Europe is still trying to get its act together in terms of what they will actually do on the broader Ukraine strategy once Trump comes in. And of course, to be able to do that, they need to first understand what is Trump's actual policy, because beyond big headlines, there still aren't many specific details.
Alberto, thank you so much. Alberto Nardelli there in Rio. I urge everyone also to go and read actually Alberto's story on the website and on social media. Now, coming up, AI hysteria has largely played out in the stock markets. Now, debt bankers want to get in on the $1 trillion payday. Our big take story is next, and this is Bloomberg. From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Welcome back, everyone. Now, HSBC has asked hundreds of managers to reapply for jobs in the firm's newly formed corporate and institutional banking division. It comes as the chief executive, George El-Hedary, continues his hunt for ways to make the bank run more efficiently. So let's bring in Bloomberg's finance reporter, Harry Wilson, who's in London. Harry, this feels like a big deal. Do we have any idea of how many people he wants to let go of?
Well, we're getting sort of early hints at the moment of how big this might be. Obviously, you're dealing with two very large divisions that are coming together. So you're talking about roughly 90,000 people in the total division. But what we're writing about here is actually a much smaller subset. We're talking about the absolute top senior management. So really, you're talking about a cadre probably roughly in the sort of hundreds, low thousands. And at the moment, our sense is we haven't really got a proper idea of what the total numbers could be like, but I think we should be getting something probably in the next few days or even definitely in the next few weeks.
So, Harry, overall, I mean, this is not cost cutting. Is this like a restructure? Like, do we know what the chief executive is actually thinking of what he wants HSBC to be?
Well, I think what they talk about is a simplification. So you have, at the moment, a pretty complex global structure for the bank. The CEO is talking about trying to simplify that, trying to make the bank work better than it has in the past. But of course, when you talk about also senior job cuts, you inevitably talk about cost cuts as well. And I imagine they've already said that this is going to result in a net cost reduction. And I imagine, given the levels of people that you're talking about here, it could be quite a substantial one. But unfortunately, we're going to have to be waiting until about February at the moment for the further details on that.
Harry, thank you so much. Bloomberg's finance reporter there, Harry Wilson, in London. Now let's get to our big take. Marquee names from the world of finance, including Apollo Global Management, Blackstone. They're all getting ready to gate crash the AI boom. Now, analysis by Bloomberg actually estimates at least $1 trillion of spending is needed for data centers, electricity supplies, and communication networks. Joining us now for more on our big take story is Bloomberg's Tassos Vosos. Tassos, thank you for joining us. So what does this all mean for bankers? And actually, I know the story that you wrote with a lot of colleagues, I mean, the numbers are absolutely huge in it.
Of course, they're going to be huge. So the short answer is it's going to need trillions. The longer answer is how many trillions. That's a matter of debate. But the numbers are huge because you have all these massive black boxes, also called data centers, sprawling across the world. They're going to need massive amounts of capital to be built, and then you have to power them. And there's reports coming out that saying that a large data center, for example, requires the power of the city of Miami, for instance. And at the same time, when these are up and running, you'll need to cool them down as well. So as you can imagine, there are like three processes. All of them require massive amounts of money, recurrent amounts of money, which means that financing is going to be quite an issue over the next several years, which means a bonanza, for example, for bankers and private debt houses that are going to arrange this financing.
Tasso, I mean, when you're in the middle of a market frenzy, it makes so much sense. So we're always on our phones. We say, of course, this is going to change everything. AI is going to change everything. But what could actually go wrong? Could it be too good to be true?
Well, we do say that. Everyone who goes to, say, read this story on Bloomberg Terminal, they'll see that we use AI. If you do, a search on your phone, they use AI. So it feels that nothing can potentially go wrong. But it's a matter of timing, as always. We do speak about these trillions. Bankers are angling to get some piece of that pie. And the question is when that, part of a $1 trillion bonanza is going to come from. And investors are not going to be too patient when it comes to reaping the benefits of it. If you are saying there's a $1 trillion market out there ready to be reaped, not just by you, but everyone else out there, so you should have a guaranteed piece of that pie. If that pie is not coming in the next year, in the next 2 years, then investors are going to get quite, iffy about it.
Tassos, thank you so much. Tassos Vosos there with the very latest on the big take. Coming up later today, we are in Athens. You've been wondering why we've been in Athens all day, but actually we're here for the Greek Prime Minister, Kyriakos Mitsotakis, along with the country's central bank governor. We're here for a special event, really looking at the future of the Greek banking. And this, remember, is after, it's amazing how Greece has come a long way since the crisis about 15 years ago. So we'll have plenty more on that shortly. This is Bloomberg.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
We're here in Athens for Bloomberg's Future of Greek Symposium, or Future of Greek Finance Symposium, for a deep dive into the country's banking sector as it enters a new era. Now, we'll be joined by the Greek Prime Minister, Kyriakos Mitsotakis, Bank of Greece Governor, Yannis Tornaras, and, of course, chief executives of the top leaders in the country. Now, you will be able to follow all of the discussions on Bloomberg.com. For now, let's bring Bloomberg's executive editor for Europe, Chad Thomas. Chad, I'm excited to be here. I'm here with you. We'll do a fantastic coverage because it's incredible to just think back, to 10, 15 years ago and how far Greece has come.
Yeah, I remember coming here 10, 15 years ago, and the mood here was pretty abysmal. Now, when you look at the economic stats for Greece, they have growth that outpaces the Eurozone average. The unemployment rate has come down to 8%. They returned to investment grade last year. And the banks have now all been privatized. They were, of course, owned by the state in that bailout process that took place 10, 15 years ago. So it has been a remarkable transformation. I'm really looking forward to the discussion today with both the Prime Minister and also to hear what the bank CEOs have to say about what's the path forward for the banks now that they are in private hands again. It potentially opens up more opportunities for them.
Chad, I mean, again, this is, a country that politically has been quite stable. I mean, there are question marks about what happened over the last couple of days with nationalists being kicked out of the government. But it's incredible. Do you think this is a blueprint of what Europe could look like? And again, the banks have now facing potential M&A and things like that we should watch out for.
Well, certainly there are interesting things to watch out for in Greece. And also one of the things that I think we should all be thinking about is what role will Mitsotakis try to play on the global stage? He is now an elder statesman for Europe. He's one of the few leaders still in power in Europe who actually worked with President-elect Trump when he was president the last time around. They've already had conversations with one another. Mitsotakis has invited the president-elect to come to Greece and in theory, have some sort of a big event here. So it'll be interesting to see how he tries to be that elder statesman, if you will, for Europe on the global stage.
What's your killer question for the banks? It's probably dividends and whether they're going to do some kind of M&A.
Yeah, I mean, that's always the question that we want to ask, right? More money to shareholders, and are they going to buy anything?
There you go. That's the perfect teaser in a nutshell, Chad. Thank you so much. As always, Chad Thomas, our executive editor for Europe, Chad Thomas. So we'll have a full roundup, of course, of everything that's been happening in Greece and that will happen in the future. A reminder, you can watch Bloomberg's Future of Greek Finance Symposium on our website as well as Live Go. We'll have some opening remarks. They start in around 30 minutes from now, and then we'll be joined by the Greek Prime Minister Kyriakos Mitsotakis, the Bank of Greece Governor Yannis Tornaras, and then we have, of course, the top 4 systemic Greek banks. We'll be joined by the chief executives there. They'll also get a couple of questions on Trump and, of course, tariffs and what's the best way to navigate that. Up next, Bloomberg Brief, Danny Berger, Manus Krani in New York, and this is Bloomberg.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Position in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating. And then you'd start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch. Plus,
the narrative has established itself. We get the dollar positive narrative, we get a euro negative narrative, and it's just going to sort of keep jumping down a little bit, stabilize, go down. I don't necessarily think we're going to get this massive rout. If we did, we'd probably look at sub-parity levels at this point. So I think it's just going to be a steady narrative of dollar strength and euro weakness that's going to take us down there. Most likely we're going to undershoot that target at some point as well. So I think that's the more likely scenario.
Sonia, could we have, if we have a scenario where the Fed is pausing and financial conditions are getting tighter with a stronger dollar and the ECB needing to cut in response to that, and then again you get this loop that kind of goes over and over of widening rate differentials, what could that look like next year and beyond?
Well, I think that is the big question for next year, sort of especially looking to the second half of the year. We have the story that the ECB will be cutting rates at a point when the Fed has already stopped. That is part of the euro-dollar negative narrative right now. At the same time, let's not forget, there is a flip side to the trade tariff coin here. The eurozone isn't gonna not do anything. They will respond to tariffs, and those tariffs, when they lift it in the eurozone, will also have an impact on inflation. Probably very moderate, given that growth is very weak, but it's not going to be a one-way street all the way.
Sonia, we really appreciate your time this morning. Thank you for kicking off the week with us. Sonia Martin of DZ Bank. Okay, let's get to some other top stories that are trending on your terminal this morning. HSBC has asked hundreds of managers to reapply for jobs in its corporate and institutional banking division. That's part of the CEO's revamp. The British bank will begin to dismiss several hundred managing directors and other senior bankers in the coming weeks.
Goldman Sachs is predicting gold will rally to a record in 2025, with analysts reiterating the target, $3,000 an ounce. That's by next December. The driver of the forecast is higher demand from central banks and possible escalating trade tensions.
President-elect Trump's transition team has told advisors that they plan to ease U.S. rules for self-driving cars. Current federal rules pose significant roadblocks for companies looking to deploy autonomous vehicles. Past efforts to come up with federal legislation to regulate them have stumbled, but now Elon is on Team Trump.
Coming up, Trump's pick for Treasury Secretary is getting more complicated, to say the least. More runners and riders for the role. That's next.
And another 5 to 10% pullback in stocks may have begun. That's according to RBC's Lori Calvasina. She's going to be joining us later this hour. Do not miss that conversation on your Bloomberg Brief.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching The Close.
Welcome to Balance of Power.
This is Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
season is here.
Third quarter earnings season, as we've been talking about, really in high gear.
Bloomberg is first to break the numbers.
We have some big earnings after the bell.
Earnings from Caesars crossing the Bloomberg terminal.
Mondelez is reporting
Reddit, AMD, Snap.
Let's keep the conversation going.
With the smartest insights.
The bar keeps getting higher. 20% growth rate, when your comps get tougher, how much can you beat and raise?
Continuing coverage on Bloomberg. Context changes everything.
It's your Bloomberg Brief. Danny Berger and Manus Cranny in New York. President-elect Donald Trump's next administration continues to take shape. Picks for press secretary, energy secretary, and FCC have been announced since Friday morning. But notably, what has not been announced is Treasury Secretary. Over the weekend, fantastic reporting from the Bloomberg team. Instead of narrowing the search to a final candidate, the search fell into disarray, and the former president is reportedly getting irritated at the jockeying going on, not just behind the scenes, but spilling out into public view, too. Let's get to our reporter on the story. It is Bloomberg's chief political correspondent, Anne-Marie Hordern. Anne-Marie, how did this happen? There was a moment where it seemed like Scott Bessent was the clear front runner. This morning, it seems like it's anyone's game.
Well, it was Scott Bessent and Howard Lutnick, both vying for the job. And the issue has become the tension between the two, the tension around the Trump team. It's become so untenable that they're seeing that it's become visibly frustrating for President-elect Trump. So they're starting to add some names into this, like Apollo's Mark Rowan, Kevin Warsh, also hearing the likes of Lighthizer might be back in the mix. So potentially there's going to be a longer menu available to President-elect if this situation of frustration continues. Although we know and we've reported that they are looking for potentially another position for Howard Lutnick, and that would maybe be one of these fancy, exciting ambassadorship positions. He's an individual that raised a lot of money for President-elect Trump at the very end of the campaign. Something else, though, that came to light over the weekend and maybe would dim his chances of vying for the top Treasury post is that this is an individual that also gave to Hillary Clinton in 2016 and also to Kamala Harris when she was running for her Senate seat.
Well, certainly there was fury on Saturday morning with Elon Musk's tweet about Bessent is business as usual. And you go to the end of that tweet, driving America bankrupt, so we need a change. It's interesting how he focuses on the bankruptcy. But in terms of the other names that are out there, the market seems to really like Bessent because of his cognizance and his understanding of debt. When you look at the other names in the story, Mark Rowan, Bill Hegarty, Kevin Warsh. Now, Kevin Warsh is where it could get a little bit more interesting. So it's a policy of appeasement for Lutnick. Then who are these? Are these other names, in your words, dark horses or real possibilities?
I think at the moment they're dark horses, but you could see the team is trying to expand out the search of potentially who could become the Treasury Secretary if this tension just becomes unavoidable between these two individuals. So they are looking for other names. Potentially also Scott Bessent could go somewhere else in terms of economic advisory to the president. He's been with him on the campaign trail. Another name we heard yesterday is Peter Navarro, who is a trade skeptic, very different than a Kevin Warsh, maybe a Treasury. So you almost see two different camps vying for this. Those that really want the tariffs to go up and the walls to go up, and those that are a little bit want to take it maybe more in a judicious approach. Wall Street Journal editorial this morning is saying that Elon Musk should stay out of this. To your point about his tweet, he was responding to Kyle Bass, who said that, who's going to be joining us on Surveillance a little bit later today, and he was talking about the fact that he thinks Scott Bessent is eminently more qualified than Howard Lutnick, and I think that's the issue with this story. It's now no longer just tension at Mar-a-Lago. It's now expanding into the public sphere. And for that, for President-elect Donald Trump, is something he doesn't want to see.
I mean, that's why this next 4 years is going to be so interesting in how it's truth or tweet or whatever, which, by the way, Elon Musk tweeted overnight, basically, who would be better at Fed policy if Federal Reserve Chair an 8-ball, and everyone voted the 8-ball.
Well, the problem is this is really messy, but it's not messy for a position that doesn't have as much consequence. This is a really consequential, important job. $28 trillion of debt. This is the world's leading U.S., their currency, the dollar is the world leading currency. This is an incredibly important job, especially for a president that uses the stock market, as Jonathan Farrell's always talked about, as a check and balance on his policy proposals.
Well, Liberty Energy is up 48% in the pre-market on the back of Chris Wright being nominated for Energy Secretary. So it does matter to stock valuations. Anne-Marie, thank you very much. Great reporting, you and the team, over the weekend. Our very own Anne-Marie Horder. Staying with geopolitics, after nearly 1,000 days of fighting, Ukraine's allies are increasingly leaning on President Zelensky to consider new ways to negotiate with Russia's President Putin to bring an end to the war. Let's bring in our Bloomberg opinion writer, Mark Champion. Mark, good morning to you. We know that German Chancellor Olaf Scholz held a call with Putin on Friday, and various quarters have derided that. The French President Macron says he would speak to Putin, but when the time is right. So this pressure is mounting on Zelensky. Obviously, there's moves over the weekend from the Americans in regards to military aid. But ahead of a Trump re-entering the White House, this pressure is mounting. And the question is, how strong are Zelensky's bargaining chips?
Well, Zelensky's not in a very strong position. On the other hand, I think what we're seeing, he described it as opening a Pandora's box. And I think that is probably more accurate than a kind of concerted mounting pressure. What you've seen is Olaf Scholz, the German Chancellor, who's very much in trouble at home. This was really a domestic political move. He was going, he opened up a phone call to Putin to sort of, give himself some international standing as he faces, elections that are going to be coming at home. And he's not in a very good spot. Even his own party is thinking about replacing him. And he's certainly not the guy who is going to negotiate the peace. The other one who's kind of an early mover is the Turkish president, Recep Tayyip Erdogan. He's always been, trying to, push a negotiated solution. He was the guy who did successfully negotiate a grain deal for Ukraine earlier in the war. So he has started to sort of talk. But otherwise, it's more of a mixed picture. I think what's basically happened is that the election of Donald Trump has opened the gates for different people to start positioning. And that is worrying for Zelensky, not because he's not looking for an end to the war himself. He said that he wants that to happen next year. What's really at issue here is that he and various of his stronger allies in Europe, they want to see a negotiation begin once he's in a better position, once in the battlefield, once President Putin doesn't feel like he's got nothing to lose by continuing until Ukraine and its allies capitulate.
Well, on sort of the idea of trying to be in as strong as a position as possible when Trump comes into office, there does seem to be the Biden team in Ukraine trying to do the same. Reporting indicates that the U.S. is nearing a decision to let Ukraine hit some targets in Russia, providing more of those missiles. How would this change the dynamic?
Right. I mean, the big thing that they have available in the last few months of the year. So we're talking about roughly $1.5 billion a month that are going to be going through to Ukraine. That's considerably more than has been happening, in recent times. Then, as you mentioned, it looks like the Biden administration has now finally lifted restrictions, some of the restrictions on Ukraine's use of ATACMS missiles. These are kind of mid-range ballistic missiles. They'll depending on the model, between a range of 100 and 190 miles. They are very sophisticated, powerful weapons, but they are not game changers for the war. And it's more a kind of an acknowledgement that President Putin has already, conducted the kind of escalation that the U.S. was worried that it would conduct if they deployed the ATACMS. So there are now North Korean troops in the field fighting for Russia against Ukraine. There are now North Korean similar mid-range missiles that the North Koreans have provided, plus the Iranians have provided some 360 mid-range ballistic missiles, according to Western intelligence sources. They're not yet being used on the field, but they have been delivered.
Yeah, it's this real fear of a growing axis between Iran, Russia, and North Korea. Mark, thank you so much. That is Bloomberg opinion writer Mark Champion. Okay, coming up, Netflix finds its halftime superstar. More on who's going to be performing in its NFL debut game on this Christmas. We're going to have that coming up on your front pages on your brief.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big, with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Let's get you your front page news, a look at what's making headlines around the world. We start with this on the Wall Street Journal, that investors are betting on a melt-up. They have flocked to stock funds at a pace that is only its second most in history, going back to data from 2008. Many investors said that optimism is being driven by expectations of lower taxes and fewer regulation during Trump's second term.
Next up, Washington Post leads with President-elect Donald Trump. He's chosen Brendan Carr as the SEC chair. Carr has served at the agency since 2012. Carr's priorities include reining in big tech and unleashing economic growth.
And Manus, we have this one on the Bloomberg terminal, a very important story that Beyonce will be headlining the halftime show in Netflix's NFL debut this Christmas. Of course, the Houston Texans will be playing because it's Beyonce. But this all really goes to Netflix's push for live events. Yeah. And they had their boxing match between Jake Paul and Mike Tyson on Friday. And I said I wouldn't watch it because I hated the idea of it. And I watched it, and I'm so upset I did. It was the saddest thing I've ever seen, Manus.
And a lot of the reviews have been pretty sad. This is all about trying to get Netflix up to 10 million viewers. I mean, Tyson, 97, look at some of the data, 97 punches across the whole fight, and only 18 of them landed. Even Magic Johnson said he had to switch off the fight. He said this fight tonight was not great boxing.
No, it was, look, like there was a point where you could see Jake Paul just kind of stopped, and he even said this in post-interviews of the fight, just being like, I didn't want to knock out this legend. It was, honestly, it was really sad and abomination. Anyway, coming up, we're going to talk stocks with Lori Calvasina.
Make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
The search for a Treasury chief turns into disarray. A fuming president-elect widens his search. Leaning on Zelensky, Ukraine's allies push to find a way to end the war. And all of that ahead of a big earnings week for NVIDIA and the retailers on your report card this week.
That's probably the biggest event of the week is NVIDIA after the bell on Wednesday. Meanwhile, it is quiet after a decline of 2% last week, erasing 60% of the post-election gains. Your future session is moving higher, led by tech and Russell 2000. We're going to sit down with Lori Calvasina from RBC in just a moment, who says the drawdown might be starting. Meanwhile, for this bond market, we ended the week pricing in more hawkish policy. 13.5 basis points higher for your 10-year yield. We're up by 2 basis points. 4.45 is where we stand. And the euro finally showing just a touch of strength, Manus, but for the most part, it has been dollar strength, a one-year high, with Sonia Martin of DZ Bank saying parity is on its way.
Yeah, it's not a question of if, it's a question of when, and we break that 105 level, we are all the way to the lower side.
Yeah, and I think maybe if we get a Treasury Secretary who ends up being more hawkish on tariffs, that could be the very thing that gets us there.
What can spook us on the tariff side?
Yep. Meanwhile, that's what equity markets are looking at. As you saw, futures are moving higher, but last week declined 2% for the S&P 500. RBC's Lori Calvasina writing this. Over the past week, we've become increasingly convinced that the S&P 500 may have already begun to experience another 5 to 10% drawdown or garden variety pullback. Pleased to say Lori joins us now. She's head of U.S. equity strategy at RBC. So Lori, what have you seen that's leading you to see that the pullback is starting?
So look, we've looked at our valuation work. We've been getting a ton of questions on this. And it's not that we've necessarily hit the exact tip top, and I'm not going to go through all the models, but there just isn't a lot of room. And one of the models we do rely on pretty heavily has been saying all along that fair value for the S&P 500 at the end of the year is about 5,400. And I can sort of stretch that math to maybe like 5,600. If I play around with the assumptions, but that has been bothering me, frankly. If you look at the second thing, it's going back to early October. We saw a couple times in October AAII net bulls move to 1 standard deviation above the long-term average on the 4-week average, and a signal like that has preceded every 5 to 10% drawdown we've had post the 2022 lows. And then you look at the CFTC data, which we got the update on Friday, and U.S. equity futures positioning just continues to surge, and small caps are a good barometer in here, and they've already been at the 2016 highs the last time we got a big Trump trade there. And so we just look at all this data and we say, we just don't have the capacity to absorb bad news. Then I went out and started talking to clients last week, and I just sensed really, just kind of a chill in the air and a little bit of fatigue. I think people are finally starting to pay attention to the fact that earnings are lackluster. The post-election commentary has been mostly focused on tariffs, which equity investors have some indigestion over. So it just feels like it's time to have this breather, and we've already moved down, pretty low.
Well, there was a breathlessness to this. There's no doubt about it. The small caps up 8%. They've given quite a lot of that back. We'll come back. I'm sure Danny will come back to small caps. You talk about there's not much room for ability to absorb bad news.
Right.
But you do say that the trigger to that bad news will be what happens with yield. And this has been the conversation that we've all been having. We kissed 4.5, real money came in. You say we can still probably tolerate something up to 5?
I think that when you, technically, I think you can based on the data. And so I look at my earnings yield gap model, which is down at minus 0.5%. And so we tack on another 50 basis points to the 10-year yield, even if I don't move the PE. That is going to take us into a range where my back test tells me that on both a 6 and 12-month forward basis, stocks tend to be down. And right now, the range we're in, 0 to minus 1%, we are typically up on a 6 and 12-month time frame. So we've been watching that model really, really closely, and it's been telling us that we can tolerate a little bit more. Right. But if I go back to last fall, when people started to throw out that 5% number, that's when markets really started to get nervous, and we did see about a 10% drawdown last fall. So I think that is really the ultimate thing. And, you know, there's all this stuff going on in politics with the picks, all the tariff discussion again. The reality is whether, you know, it's 10-year yields moving up or people starting to worry a bit about the Fed, when the interest rate vice starts to squeeze, all that other negative stuff seems to matter a bit more.
Well, we are in that season where people start to give their 2025 calls. We had Mike Wilson's, his is 6,500, up about 11%. Lori, can you even think about 2025? How do you even build a model for what that might look like?
You know, look, I will say we did a big piece at mid-year, and we've updated a lot of those models since then. And, you know, AAII net bulls are showing short-term pressure, but not 12-month pressure. Again, we're watching that yield gap model. It's still okay for now. And my valuation work, while it's been, you know, sort of putting the brakes on our thoughts for this year, it has been pointing to kind of a range of 6,200, 6,500 for next year. So you can do the math, but there is a lot out there that's highly uncertain. And I think what makes me a little bit nervous at this particular moment is I do see this case for a pullback in the short term. And when you're putting all these targets together, you have to pick a starting point. So, you know, again, I'm going to defend the strategy community a little bit here. Pay attention to their math. Pay a little bit less attention to those absolute numbers, because we do have to adjust models continuously based on new information that comes in. That is a reasonable thing to do, and based again on these starting points and where we end up on December 31st.
Right, so you're going to be burning a lot of midnight oil through 2025 with adjustments, tweets, and various communications. The dollar's at a 2-year high. To a certain extent, some of these bigger industrial companies have considered tariffs, and there's been a bit of a drawdown. But you warn on earnings per share revisions, specifically in the industrials and materials. There's no way of really getting ahead of what the tariffs will be.
Yeah, right. And I think if you sort of think about these macro wins, I don't know if they're tailwinds or headwinds, mostly headwinds, right? But just on the 10-year and the dollar coming out of Trump, those reverberate. They have ripple effects in equities. And on the 10-year yield, that's really an impact on valuation for the most part. If you look at the dollar, that's an impact on earnings revisions. And we've seen very clearly over the past few decades, I'm not even talking about the past few years, you get a stronger dollar year over year, you tend to get downward revisions to earnings forecasts. And where we see it most acutely on the sectors are some of the trade war sensitive areas, so things like industrials and materials, also areas like healthcare, consumer staples. It's pretty much every sector, frankly, except REITs and utilities. So I think we have to really watch out for that going forward as well.
It used to be, before politics was the focus, that NVIDIA earnings could be the thing that kind of excites all the bulls again. We're going to get their earnings after the bell on Wednesday. Does NVIDIA still possess that power for this overall market?
So the way we look at it is we look at earnings sentiment and the top 10 names in the market relative to the rest of the market, just the rate of upward revisions. And it's ebbed and flowed a little bit, but generally the story is the last year and a half, you've had much, much stronger upward revision trends in those top 10 names. And it's not that things have been terrible in the rest of the market, but you've just had this earnings dominance. And I'm still seeing that on the data right now. And it's funny, whenever we go through reporting season, the financials come in and that gap narrows a bit, and then we kind of get back to reality. And I feel like before some of these big names print, we always have that moment of nervousness. And even if that gap on the sentiment gauge narrows a little bit, then you kind of get away from the reports and people, you know, play around with their models, and magically that earnings dominance comes back.
You've consistently said each time that you come in that growth is more important to you than the rates narrative from the Fed. We seem to be building this pause or this optionality for the Federal Reserve. Let's see how that goes. But growth remains strong so long as the fiscal policy comes first in the horse before the cart?
So I think you want to pay attention to both, but we do really focus on that GDP environment. 0 to 2% tends to be rather weak for equities. And if you look at 2 to 4%, that tends to really be the sweet spot. And so we've got 2025 forecasts right now that are a touch below that, but we have seen economists tend to underestimate the economy. So that is something I think is going to be very tricky for all of us to navigate this year. Is it a cool economy? Is it a hot economy? We've got to get a little bit more information on that. But I will tell you, man, Dennis, I feel like it's too late in the year to be Groundhog's Day. But I am really, really tired of this, that we take the Fed, we see investors jack up their Fed expectations in terms of how many cuts and how dovish they're going to be. Then we get to an expensive place in markets and sentiment gets frothy and we say, oh, no, they're not going to do quite that much. And we got to dial it down. We have a little pullback. We've really seen small caps, endure the brunt of this. But we're just doing it again. And I'm a little annoyed because I thought we were past this after August. And somehow they just keep sucking us back in.
Well, to be fair, this is the point that Danny's made consistently about the debt and the debt coverage in terms of the small caps and the ability to do it. Laurie, great to get a garden market variety kind of pulled down. Maybe we get another drawback. Maybe we get an opportunity to step in. Laurie Calvasina joining us this morning from RBC Capital Markets. Coming up, Trump's pick for Treasury Secretary. It's getting a little bit more complicated. We'll run you through who's on the slate. That's next.
And we're live from Rio as world leaders gather in Brazil for the G20 summit. Beautiful pictures from Rio de Janeiro there. All more to come on your brief.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Our principles, our policies in support of the Palestinian people will never change. Our policy in having a two-state solution will never change, and nothing will compromise it. And as long as we are, having the capability to be helpful, we will do it. We did that between Afghanistan, between Taliban and the U.S. We did that between different parties in Lebanon and Sudan and others. And that's basically the core of our foreign policy. It's been built based on mediation, on trying to help in resolving conflicts between the party. There are countries or people might not like it, but we don't ask everyone to like it, just to understand it.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
It's Bloomberg Brief. I'm Manny Screeney alongside Danny Berger here in New York. The incoming administration's picks for Press Secretary, Energy Secretary, the FCC, they're all set, but President-elect Trump hasn't picked his Treasury Secretary yet. Over the weekend, instead of narrowing the search for the final candidates, well, it has fallen into disarray. And the former president is reportedly getting irritated at the jockeying going on behind the scenes. Kevin Whitelaw is with us for the very latest. Look, Kevin, this has erupted over the weekend on Twitter, from Elon Musk to understanding what it is that Trump wants, what his advisors want, and what the first buddy wants. So where are we in this panoply of interests?
Well, it really was interesting. It seemed that it had come down to two candidates, Howard Lutnick, the CEO of Cantor Fitzgerald, and Scott Bessent. These were both people that seemed to be in the running But they kind of got into it a little bit publicly, sort of campaigning for the job, and that seemed to annoy Donald Trump, who doesn't particularly like people sort of to be jockeying publicly for his attention in quite that way. So I do think that it looks like they've widened the search as they try to figure out, and Trump tries to balance what he's looking for. This pick is super important to him. He does measure sort of his own reviews in part on how the market is doing. And obviously a number of his friends and associates are in sort of the broader Wall Street arena. So he understands this pick is important, but he's also torn between wanting someone who's super loyal to him, someone who's going to keep the markets sort of on a clear path, but also someone who's going to bring the kind of change and disruption that he's looking for to the Treasury Department.
Well, and someone like Kevin Warsh, I pulled up this 2010 speech he gave at the New York Association for Business Economics, who basically is arguing for the merits of open and competitive markets and saying if the U.S. doesn't do that, will our quiet be deemed as acceptance by those who push the false promise of protectionism? Just looking at some of these names, I mean, who is realistic, and is Trump prioritizing someone who will be friendly to this market? I mean, this is a huge role for his favorite barometer of what the Dow Jones will do.
Absolutely. All of that's important. But remember, he's also talked a lot about tariffs. He's talked about wanting to really go hard and pursue an aggressive trade policy. And so he's also looking for someone who's going to fit into that broader sort of array of things that he's trying to accomplish. And so I don't think we at this point really have a clear sense, other than to say, so far at least, in the various picks he's had, two things have mattered the most. One is loyalty, and the other is how good they are on television defending his own agenda. And so you are seeing a certain amount of the potential candidates out there in public trying to show how good they are, in theory, at being on television and explaining his picks. As I say, though, this pick is maybe a little different than some of his others because he does care about how the market views this one, and he does care about how sort of his broader associates on Wall Street view it as well.
Yeah, indeed, and the commentary around Bessent perhaps having a little bit more depth of knowledge in terms of volatility. Let's talk about geopolitics as well. Our reporting indicates that the U.S. is nearing a decision to let Ukraine hit some targets in Russia. Obviously, this is a significant departure for Biden. Zelensky's been pushing him for these missiles and the ability to do this for a long time. How significant a departure is this, and what will the ramifications be for the allies around the U.S. with Zelensky?
Yeah, I mean, I think the key word in what you just said was some targets, and I think we are still trying to understand exactly what that's going to mean in terms of the ability for Ukraine to go after some of the sites inside the Russian-held territory from which attacks have been launched into Ukraine, some where the ammo and other weaponry is stored. Ukraine's been very, very anxious to go after this. They think it's going to help sort of defend themselves a little bit, but it's just not clear just how aggressive that's necessarily going to be and what exactly they'll be allowed to do. So it's probably going to make a bit of a difference, probably not the kind of difference that Ukraine was hoping for. And even with all of that, there's only so much that can be done by air power. And I think, unfortunately, we're still in this position where the front line is only moving a little bit. And so far, recently, it's not been in Ukraine's favor.
Kevin, appreciate it. That is Bloomberg's Kevin Whitelaw. Now, elsewhere, world leaders are gathering in Brazil as the G20 kicks off in Rio. Just before the big event, President Biden spoke to President Xi at the APEC summit over the weekend.
We haven't always agreed, but our conversations have always been candid and always been frank. We have never kidded one another. We've been level with one another. I think that's vital. These conversations prevent miscalculations, and they ensure the competition between our two countries will not veer into conflict. Be competition, not conflict.
Joining us now is our reporter on the ground in Rio, Bloomberg's David Gura. David, how much power does Biden come to this G20 with, especially in regards to China, when they're going to be dealing with such a different White House in just a few months?
It's evident how reduced that power is and just how many people are trying to meet with President Biden while he's here in Rio. In the past, there would be a ton of bilateral meetings that he'd be having on the sidelines of a summit like this one. We know of very few happening at this point. So this is really kind of a swan song for the president as he makes his way from Peru. He was in the rainforest yesterday. Now he's here in Rio. And, the stock and trade of these events are larger debates about climate change and development goals and trade policy. These are things that may be fading into the horizon here as Donald Trump returns to the White House. So you look at kind of the balance of power here on the ground in Rio as all of this unfolds. And the folks that people really do want to meet with are President Xi, who is in town as well, and Keir Starmer, the Prime Minister of the United Kingdom, who's here, kind of a newer face on the international scene. And you look at his schedule, or he's likely to meet with many more people. So President Biden is here, kind of re-emphasizing the importance, as he sees it, of multilateralism, of having events like this one, of the United States' leadership role in the world. But of course, what's hanging over all of those conversations is the fact that these world leaders are familiar with the way that Donald Trump governs. There was uncertainty back in 2016 about what a Trump presidency would be like. Safe to say, a lot of that uncertainty has evaporated. They've navigated these waters before, and now they're kind of bracing themselves for what that's going to be like and how they're going to have to kind of change the tenor of their relationships, both together and with the United States.
Well, it's interesting, of course, that Xi, during that meeting, talked about, 4 red lines, but he also said a new Cold War cannot be fought and cannot be won, and containment of China is unwise, undesirable, and will not succeed. To that end, when you look at Biden, he's in this closing months of his presidency. This is a group of nations that are really trying to understand what 2025 will look like. They're not really focused, I would say, too much on Biden or what is his lasting impact on this group.
You listen to what he had to say in Peru before that meeting with President Xi, and there was so much emphasis on the fact that he had kind of reinvigorated this line of communication between Washington and Beijing. Of course, that had fallen fallow when Donald Trump was in the White House the first time, and there were a few diplomatic trips from Biden's cabinet secretaries to Beijing and vice versa, and they had that summit in Woodlands, California, ahead of the APEC summit last year. But they haven't talked a lot. There's still a lot of issues they have to work through. You look at that imprint. Yes, I think that he's made inroads to the extent that he wanted to. Certainly these are two countries that are competing with one another, but do have more of a cordial relationship than they did when Joe Biden came into the White House. Again, I think that the major issue here is how much is that going to last? And there's a lot of hope, I think, from President Biden that what he's been able to do and those commitments on the issues of fentanyl and sort of other broader national security issues might stay in place when Donald Trump comes into office. But it's quite clear what Donald Trump's rhetoric is when it comes to China. The fact that he wants to levy even more tariffs on that country, what that's going to mean going forward. So I think there's the hope and the dream of Joe Biden here in the last couple of months of his presidency, but this broader awareness of what's really likely to happen here. And I think it's candidly got to be very difficult for him to sort of come to terms with that. This was not the meeting that he was hoping to have here, of course. He was hoping that his Vice President Kamala Harris would be elected, and that moment, those 4 years of Donald Trump's presidency would be seen as an aberration, and we'd see this return kind of to the American century and American leadership. Of course, that's not the case. That's not what happened.
Okay, David, hard reporting gig there, but good work. We know you've got a long day ahead of you there. That is David Gura reporting from Rio. Stocks linked to self-driving cars getting a boost this morning. Investors are getting a glimpse of President-elect Trump's policy around the sector. Members of his team have told advisors that they plan to make a federal framework for fully autonomous vehicles one of the Transportation's Department's priorities. Craig Trudell is on this story. You just look at Tesla this morning. It's the ferocity in the stock. It's just amazing, up over 8%. This is everything that Elon would have wished for by, I suppose, his ability to lobby for this internally, isn't it, Craig?
Yeah, I mean, this was something that he was extremely explicit about a few weeks ago on Tesla's last earnings call, this idea that he wanted a national framework for approving autonomous vehicles. And that is precisely what we're hearing from sources that the Trump transition team is looking for in a Transportation Department secretary, someone who's going to prioritize that pursuit. I think it's absolutely something that would benefit Tesla. That is clear, but it wouldn't be something that would sort of overnight be a big boost to the company. In part because they don't have an autonomous vehicle ready, and Elon Musk himself has referred to this idea of maybe 2026 or 2027 deploying these cyber cabs, and so. The vehicles that we saw just a few weeks ago when Tesla held an event around this, those were prototypes and they were running around a Hollywood studio. So this is still very much sort of, science fiction, if you will, at least when it comes to Tesla. But we do have major companies, Waymo, the company owned by Alphabet, that does have autonomous vehicles on the road. they have to have a steering wheel and pedals in them, even if there's not a human at the wheel and at those pedals, because of federal motor vehicle safety standards. And that's what we're talking about here, is really, sort of narrowly trying to, come up with a way to avoid those standards for these autonomous vehicles.
Right, and we know Musk isn't someone who necessarily hits his deadlines. Craig, thank you very much. Bloomberg's Craig Trudell there. We'll take you out with live images from Athens, where the Greek Prime Minister Kyriakos Mitsotakis is speaking with Bloomberg's Francine Lacqua.
One of the tragedies of the crisis was that the banks were essentially forced to sell off their holdings in the markets. I mean, they were forced to do it. They didn't want to do it, but they were forced.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
There is this real momentum from Wall Street.
We're basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome back to Bloomberg Brief on this Monday morning. Let's get you set up for your trading week. Here's what's ahead. The G20 summit that will be kicking off in Rio de Janeiro with world leaders there through Tuesday. The ruling on President-elect Trump's hush money trial case in New York also taking place on Tuesday. And then the big market events, we're going to get earnings from NVIDIA, Walmart, and Target. Manus, those all coming throughout the week.
Yeah, NVIDIA is dipping this morning. Danny, we got information's report that the Blackwell AI chip design has hit a small snag, but they have the same swag on the reporting on Wednesday. Liberty Energy soaring away as President-elect taps CEO Chris Wright for Energy Secretary and MicroStrategy. Well, that's a bet on Bitcoin, isn't it? The cash helps the firm build $26 billion in a Bitcoin cash.
Yep, and those NVIDIA earnings coming on Wednesday. Will it be the market event, moving event that it usually is? This is Bloomberg.
First of all, global trade, which had adverse consequences that we're learning about to this day, still unleashed an enormous amount of gain for humanity. And with the rise of global trade became the rise of information sharing around the world, which rapidly accelerated the trajectory of mankind. I mean, of note, the Chinese, for example, are leaders in solar, they're leaders in EVs, they're leaders in a number of emerging technologies. In a world which is more splintered, we'll see the gains that the Chinese have achieved in these important areas not shared by the Western countries. And conversely, the United States is a clear leader in AI, along with a number of the European countries, and those gains will not be shared with China and the countries in its sphere of influence. So it's a very clear-cut loss for all of humanity when we have the severing of ties between our countries.
On a practical level, is it getting harder to manage the risks you face?
I think that one has to be aware that there are more tail risks that are harder to ultimately manage.
As we spend some time here on the broader presidential race,
let's focus in on European politics.
Makes you wonder how politics might play out.
Where markets are right now is maybe you could say in the easier phase of the optimism curve when no policy change has yet been implemented, and so kind of all options are still on the table.
When you look at the layers of promises which would grow the debt, complicated policies like tariffs, this is not going to be an easy situation.
The market is front-running economic announcements.
The reality is you may get a lot more fiscal stimulus before the end of this year.
Policy error probably is our biggest risk, whether it be from the administration or whether it be from the Federal Reserve.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Well, let's get your trading week started live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now, coming off the back of the biggest one-week loss on the S&P 500 in more than 2 months. Equity futures attempted to bounce back, up by 0.1% on the S&P. On the Nasdaq 100, we're up by 0.5%. The Nasdaq last week down every single trading day, a 5-day losing streak. Going into this week ahead, tons of earnings. You'll hear from Walmart, you'll hear from Target, but the big one for the Nasdaq 100, you'll hear from Nvidia on Wednesday. That's the big earnings report. Right now, the eyes of Wall Street on a battle royale in Palm Beach. Kicking it all off over the weekend, money managers from Dan Loeb to Kyle Bass throwing their support to Scott Bessent, triggering this response from Elon Musk. Business as usual under Scott Bessent or real change under Howard Lutnick. Reporting over the weekend on this issue, our very own Anne-Marie. AMH, where is this race?
So the tension in Palm Beach is spilling out, as you see, onto Twitter, and that has caused, obviously, some nervousness when it comes to the former president and potentially the president-elect on who he's going to choose for this top job, which means now, because the tension is so high between Howard Lutnick and Scott Bessent, that they're expanding the search. We're hearing other names now, like Kevin Warsh, like Mark Rowan of Apollo, like Senator Hagerty back in the mix. Scott Bessent is still there, and they are looking for potentially an off-ramp for Howard Lutnick.
So there's a fascinating paradigm right now, which is essentially pitting the idea of shaking everything up, Elon Musk's basically tearing up the status quo, and people like Kyle Bass, like some of these other big finance heads coming out and saying the market has chosen. The market will prefer Scott Bessent, and what we understand right now is we're getting a real test of whether the market is the ultimate test for Donald Trump and his policy.
Just how sensitive will Donald Trump be to equity markets this time around? I used to call this the presidential put, or the Trump put. Are we finding out if it's not the likes of Scott Bessent that they go in a different direction, that his sensitivity has shifted somewhat? And I think that's a really important question as we wait for this decision.
Also this morning, Wall Street Journal editorial board, I'm sure President-elect Donald Trump will be looking at this. They're saying Donald Trump's cabinet nominees so far reveal a desire to disrupt Washington, and disruption is needed in many places. But as he mulls his choices for Treasury and the economic policy post, the question markets will ask is whether he will disrupt the policy mix that was successful in the first term. And you can see other names coming to light. We've reported last night for NEC, potentially Peter Navarro is in the mix. So you have these two camps of those that are a bit more traditional, want to be a little bit more judicious when it comes to tariffs, and those that want to go really blanket tariffs day one, 60% on China, 10% around the United States.
Let's sit on the first term. I actually thought the approach to the first term was highly effective. You have sort of a marketing role in the NEC, the National Economic Council. The director at that time was Larry Kudlow, fantastic salesman. Then you have someone a little bit more sophisticated, a little bit more quiet, someone that can actually work diplomatically with some of your allies to get where you want to be in a Treasury, and that was Stephen Mnuchin. Now, if you're going to do this time around, do you want the guy who's a little bit louder to be over at the NEC? Who might that be? A Howard Lutnick? And you'd want someone a bit more thoughtful, sophisticated, a Scott Bessent over at Treasury. And that's why a lot of people thought that was the direction of travel until the last week.
Peter Scheer of Academy Securities put it really well. He put out a note over the weekend saying 3D chess or 52 card pickup. Is there basically some sort of cohesive strategy here? Or is this basically giving cabinet positions to all the people who helped out and basically payback for loyalty? And that ultimately is one key question for markets that have taken about 60% of the post-election euphoria out of markets. And you've seen that real pullback. And certainly we saw that last week.
This is the individual that's got to oversee a $28 trillion bond market. This is the bond price action right now. Lisa, since we last spoke, your 10-year yield is a whole lot higher. Just short of 450 right now. We've reached that level on Friday for the first time since May, but yields are higher by 2 basis points on a session. Bramo, 446.
Yeah, basically, you had a whole host of issues while it was gone, including better than expected retail sales, in particular revisions, in particular some of the inflation on the PPI side, but then some of the Fed speak, where suddenly it seems like different Fed officials, led by Chair Powell himself, seems amenable to not cutting rates as quickly as they were before, that they were concerned about some of the better than expected economic data. There also is this feeling that the sequencing of Trump's policies may not be that favorable to the bond market. Either way, you've retraced most of your gains, and what you're seeing is a real rethinking of just how low these rates can go.
The 2-year this morning up by a single basis point. The 2-year yield 4.31. Coming up this hour, we'll catch up with Steve Major of HSBC with the bond market in a 2-month slump. Terry Haynes of Pangea Policy on the search for Trump's Treasury Secretary, and Gilles Moak of AXA on Europe's complicated position. We begin this hour with stocks coming off their worst week in more than 2 months. 10-year Treasury yield steadying after topping 4.5% for the first time since May. Stephen Major of HSBC adjusting his outlook. We shift our 2025 10-year Treasury forecast to 350, reflecting uncertainty over the floor. The reversal of the summer rally looks overdone, so we keep the near-term conviction at bullish. Steve joins us now for more. Steve, my friend, welcome to the program. Let's start with that near-term bullish call. At a time where a lot of people are bearish on the bond market, give us a reason to be bullish.
Well, it's all about the forwards and what's priced in, John. And we've spent the last 2 months pricing in what's just happened. It's no longer an uncertainty in terms of who's going to win the election, is it? So in fact, we've probably removed some of the uncertainty from a few months ago, in my opinion. We actually know who the president's going to be next year. But as you were saying in the prelude just there, the sequencing of these policies is still a bit uncertain. The only thing that we've got to really go on is the valuations. And markets are priced for a much higher equilibrium rate than the Fed's been indicating. So, 4% or more for the longer run equilibrium. And in the recent piece that you referred to, I gamed out a scenario whereby the Fed even reversed its rate cuts of this year. Now, I'm not saying that's our baseline. It's not our forecast at all. But I'm just saying to try and game out what the yield should be, you have to imagine a scenario whereby the Fed gets really hawkish rather than just pausing. And I think that if that was to happen, and it's unlikely, but if it was to happen, it's the front end that is the most mispriced, not the back end. So the 10-year yields look at a decent level to me, and probably a good entry point for bond investors.
Steve, could we talk about the back end just a little bit more? There is plenty of discussion about the prospect of increased supply, more deficit spending. You've written about this a million times. I know your thoughts on the subject have evolved over the last few years. How do you think about supply and its influence on price in the bond market?
Well, you know very well that I think that the idea that you can look at the future supply and say that the yield will go up or down doesn't make a lot of sense. You mentioned $28 trillion. That's the free float of bonds these days. On Trump 1.0 back in 2016, it was about half of that. So the stock has doubled, but I don't really see how that has driven the bond yield. Today's bond yield is about the policy rate and expectations for the policy rate, full stop. Now, every dealing room in the world has to deal with concessions around auctions and syndications, but that should not be confused with a strategic view on bonds. So there is a term premium factored into the long end, and that's about the supply-demand potential imbalance. But it's priced in, John. And I think that the risk is some people could be double counting that term premium.
Steve, what strikes me, what's unique about your view is some degree of conviction. I was reading a whole host of year-ahead outlooks over the weekend, and there's very little conviction. Morgan Stanley had a range on the S&P from 4,600 to 7,400 with the possibility of, some sort of hot reacceleration of inflation or potentially stagflation. What gives you the certainty that on a longer-term trajectory, whether it's supply or whether it's just even the possibility of growth that exceeds expectations, that long end is pegged, that you could see yields come in?
Yeah. Look, there's no certainty around anything. These are scenarios and they're probability weighted. My point is we're priced for strong growth and additional term premium. So, for example, long-dated forward real yields above 2%. That's above the trend GDP. Now, it could be that all these policies mean that we should be looking at a much higher trend GDP, but the FOMC hasn't changed their view on that yet. And frankly, I doubt it. I think it's more plausible to be talking about a sugar rush than it is to be talking about an upward shift in the trend. If you think about the aggregate of the policies, the aggregate, some of them will give, some of them will take. I doubt that the longer run trend is being revised up. And for that reason, I will stress that longer run real yields are above that trend. And in that case, investors are protected. They garner some risk premium by receiving long end securities.
What I thought was interesting about your notes, Steve, is that I think about your call over the past 10 years, and you've been the perennial bond bull, and you've mostly been right, except that we've been in sort of this new regime that's causing a lot of people to question whether yields can continue to go lower. I'm just wondering, what makes you think that this time is not different with the fact that you've got yields rising around the world, where you have Japan suddenly not becoming that sort of peg in negative yield land, when you have the idea of even potentially Germany engaging in fiscal expansion?
Yeah, that's a very good points there, and you're introducing the global angle to the forecasts, and thank you for that. Look, over the last decade or so, we've also had neutral calls. We haven't always been full flat out bullish the whole time. So I think that whilst I might be badged to something regarding my view, we are quite tactical as well. It's true, on balance, we tend to be more bullish than bearish. But the global point is well made. You introduced the idea that Japan could be contributing a different impulse to yields in the future. Maybe Japanese investors won't buy treasuries as much. Maybe they're going to repatriate. But that's all possible. But at the same time, we have to take into account what's happening in China and what's happening in Europe. To me, it's pretty unambiguous that the longer run equilibrium rates, the R stars, if you like, for China and Europe have been going down. And therefore, it makes it difficult for me to see how the US can be so exceptional. These rates tend to be co-integrated. So yeah, you can always find an anecdote or a particular region that says that something might change, but it's on aggregate, Lisa. I think the China and Europe contribution to the global rates call is unambiguously pulling yields down.
Stephen, when it comes to this exceptionalism with the United States and this idea of policy impacting the bond market, how concerned are you about the fact that before we even get to policy, we don't have the personnel, and we see a messy transition when it comes to appointing the top post at the Treasury Department?
Yeah, Anne-Marie, that's an important point. We're just sitting here. In some regards, we are speculating. We don't know who the people are. We don't know what the policies are. We're not going to know for a few months. And so it's completely rational for the Fed and economists in general to say we're waiting and we're watching the data. Now, if you do that, if you wait and watch the data, you've got the potential in the next 3 months before you don't have any certainty about the policies of things softening up. Today's bond yields are caught in this trap whereby they've been pulled higher by putting a heavy weighting on the no landing and Trump 2.0 scenario. And they're not really reflecting the fact that hard landing is a possibility for 2025. Just the fact that people have stopped talking about it hasn't actually shifted the probability. So in the coming months, whilst we're all waiting on the data and waiting on the personnel, there's a lot that could happen. And I'm not going to say what the event will be because I frankly don't know. It's just about probabilities, and that's how bond markets work. The bonds are priced as if everything's going to be perfect and all the policies are going to be on the hawkish end of the range, and therefore bullish for the stock market and bearish for the bond market. I think we've had a couple of months pricing that in already.
Steve, it's good to hear from you, sir. As always, Stephen Major there of HSBC with a lot to chew over. Andrew Honhorst of Citi echoing some of this stuff, saying just last week markets are underestimating labour market weakness and Lisa overestimating the inflationary effects of upcoming tariffs and fiscal policy.
Especially because what we've heard over the past couple of weeks from members of the House and members of the Senate who are Republicans is you need to offset some of the tax cuts and other plans with potentially cuts elsewhere. This isn't about some sort of fiscal impulse, and there does seem to be restraint. So on that level, it's not necessarily going to be another fiscal expansion with at least lip service being given to some restraint.
If you are just joining us, welcome to the programme. Equity futures right now on the S&P up by about 0.1%. With an update on stories elsewhere with your Bloomberg Brief, here's Danny Berger. Hey, Danny.
Hey, John. T-Mobile is the latest victim of a cyber attack. The company reported its network was breached by Chinese hackers in an attack on multiple telecom companies. U.S. officials said the hackers infiltrated the networks in an attempt to steal customer call records and compromise communications belonging to a limited number of people in government and politics. That includes President-elect Donald Trump. A report from The Information says that NVIDIA has asked its suppliers to change the design of its server racks for its new Blackwell chips because of an overheating problem. Shares down 2% in the pre-market. The changes to the chip came late in the production process, but the chip giant hasn't told customers of a production delay in the chips. NVIDIA reports earnings post-market on Wednesday. And the widely anticipated fight between Jake Paul and Mike Tyson may have failed to live up to the hype, but that didn't stop it from surpassing expectations from a ratings standpoint. Netflix reported an audience of 65 million viewers. That rivaled some of the world's most watched sporting events. Still, many viewers took to social media to air frustrations around glitchy and buffering streams. The 27-year-old Paul easily beat the 58-year-old Tyson after 8 rounds. Paul took home a $40 million paycheck. For Tyson, it was $20 million. And that's your brief, John.
Absolutely ridiculous numbers, Danny. Thank you. Up next on the program, Besson versus Lutnick.
In Trump 1.0, we had non-inflationary growth.
You're going to have the possibility of balancing the budget of the United States of America at the end of his term.
The race for Treasury Secretary getting just a little bit chaotic. That conversation up next from New York City this morning. Good morning.
politics to the world of business. Joe Matthew and Kaylee Lyons deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Equity futures on the S&P 500 firmer here by 0.1%. A little bit of a lift again on bond yields up 2 basis points. Let's call it 4.46. Under surveillance this morning, Besson versus Lutnick.
In Trump 1.0, we got a demand shock from the private sector fueled by the tax cuts, and that was met with deregulation, and that's why we had non-inflationary growth.
You're going to have the possibility of balancing the budget of the United States of America at the end of his term. No nonsense. It can happen because he's focused on not wasting the vast waste that is our budget.
So here's the latest. The battle to be the next Treasury Secretary intensifying over the weekend as money managers Dan Loeb and Carl Bass took to X to advocate for Scott Besson before Elon Musk replied that Besson would be business as usual, while Howard Lutnick would actually enact change. Trump has appeared frustrated with the infighting, and staff are now looking for alternatives, including former Fed Governor Kevin Walsh and Apollo's Mark Rowan. Joining us now to discuss is Terry Haynes of Pangea Policy. Terry, let's dive right into this mess. What's your base case for who gets this nod now?
Oh, goodness, I have no idea. I'm just going to follow Anne-Marie's reporting and see where we go. You know, I wrote about this 18 hours ago, and I said, you know, everybody on the street's convinced it's Besson or Lutnick, but last week you couldn't have gotten a bet on Gates or Hegseth or Gabbard or, you know, so, you know, I don't think anybody knows, frankly.
Is the lack of a Treasury pick in itself a drag on markets? The fact that this tension brewing in Palm Beach is actually now bleeding into the Twitter sphere?
Yeah, I think in two ways, actually, Anne-Marie. I mean, one of them is that, you know, I mean, first of all, you know, these staffers all need to remember who got elected president, and it's none of them. And, you know, it doesn't serve their principal, President-elect Trump, very well at all for them to be going out in public. It makes them all look bad, including Trump. So that needs to stop. Beyond that, you've got, you know, all it does is actually stoke, continued uncertainty about what the policy is actually going to be going forward, number one. Number two, one of the things that Trump has done last week is made this pick more important by the nominations of people like Gates and Hegseth and Gabbard and even Bob Kennedy for other things. I mean, it emphasizes that they need to get, you know, the Treasury pick right, the economic team pick right, because there's a lot of head scratching and concern in markets about the picks that seem kind of not up to the task.
Terry, I always say personnel is policy, but in your latest note you disagree, and I'm curious to know why.
Well, I'm not disagreeing with you really per se. What I'm really doing is suggesting that process is policy as much or more than anything else. You got a situation where, you know, the markets were thinking a week ago, well, you know, we're going to install person X into this position and that's going to drive policy. Well, you know, not so much. And you saw big reminders of that just the last few days from the Senate, where the Senate said, look, we're going to take this very seriously.
Technology company. Let's at least say it's the best time yet. Hopefully there'll be even better times in the future. I sort of think with each successive major technological revolution, you've been able to do more than you could before. And I would expect the companies to be more amazing and impactful and everything else. So yeah, I think it's the best time yet. Big companies have the edge when things are like moving slowly and not that dynamic. And then when something like this or mobile or the internet or the semiconductor revolution happens, or probably like back in the days of the Industrial Revolution, that was when upstarts had their edge. So yeah, this is like, and it's been a while since we've had one of these, so this is like pretty exciting.
In the essay, you actually say a really big thing, which is ASI, superintelligence, is actually thousands of days away.
Maybe. I mean, that's our hope, our guess, whatever. But that's a very wild statement.
Yeah. Tell us about it. I mean, that's big. That is really big.
I can see a path where the work we are doing just keeps compounding, and the rate of progress we've made over the last 3 years continues for the next 3 or 6 or 9 or whatever. 9 years would be like 3,500 days or whatever. If we can keep this rate of improvement or even increase it, like that system will be quite capable of doing a lot of things. I think already, even a system like O1 is capable of doing like quite a lot of things from just like a raw cognitive IQ on a closed-end, well-defined task in a certain area. I'm like, O1 is like a very smart thing. And I think we're nowhere near the limit of progress.
I mean, that was an architecture shift that sort of unlocked a lot. And what I'm sort of hearing is that these things are going to compound.
We could hit some like unexpected wall, or we could be missing something, but it looks to us like there's a lot of compounding in front of us still to happen.
I mean, this essay is probably the most techno-optimist of almost anything I've seen out there. Some of the things we get to look forward to, fixing the climate, establishing a space colony, the discovery of all of physics, near limitless intelligence, and abundant energy.
I do think all of those things, and probably a lot more we can't even imagine, are maybe not that far away. And I think it's like tremendously exciting that we can talk about this even semi-seriously now. One of the things that I always have loved most about YC is it encourages slightly implausible degrees of techno-optimism and just a belief that like, you can figure this out. And, in a world that I think is like sort of consistently telling people, this is not going to work, you can't do this thing, you can't do that. I think the kind of early PG spirit of just encouraging founders to like think a little bit bigger it is a special thing in the world.
But they're going to have to prioritize really quickly. What you get out of the last 2 weeks, I think, is that they haven't begun to make up their mind. Trump particularly hasn't begun to make up his mind. And that's bad for markets, I think.
Hey, Terry, appreciate your time, sir, and your thoughts. Terry Haynes there of Pangea Policy. This got messy over the weekend, and largely because Howard Lutnick has pulled a little bit of a Dick Cheney as well with this particular position overseeing the transition simultaneously.
As we said last week, this is supposed to be the producer. He's the co-head of the transition team, and at the last moment, you throw your name into the ring, and then you want to become the star, when you're supposed to be vetting the candidates like a Scott Bessent, like a Matt Gaetz, to take on the roles. You're supposed to be guiding the president-elect on who you should be putting in those roles, and then all of a sudden it becomes a fight because you want the role yourself.
The race continues. Exclusive reporting from Emery throughout this morning on that race. Coming up next on the program, the G20 summit kicking off in Rio. We'll catch up with Bloomberg's David Gura. From New York City this morning, good morning to you all. Equity futures on the S&P attempting to bounce. We're higher by 0.1%.
think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're gonna get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
A tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Five-day losing streak on the Nasdaq 100, the longest daily losing streak since the start of the year, going all the way back to January. This is your bounce. We're up 0.4% on the Nasdaq. Going into the big one, earnings from NVIDIA on Wednesday. Equity futures on the S&P just about unchanged, following the biggest weekly loss since the start of September. In a bond market, the two-year yield up and away for 4 straight weeks. Yields are higher this morning by not even a basis point. The two-year at 4.3077. Just this drip feed of better economic data, stickier inflation, just weighing, starting to erode the Fed's easing bias.
What I thought was interesting, the Citi U.S. Economic Surprise Index now at the highest level going back to February. This sort of drip feed of that index climbing higher, even as the likes of, say, Europe, and that surprise index ticks a bit lower. Fed Chair Powell saying the key words last week, which was that the economy was not sending any signal that we need to be in a hurry to lower rates, and that reset the bar for next month's rate cut or not that we might get from the Federal Reserve.
Does it set up a December pause? CPI December 11th, payrolls December 6th. With those high yields, a stronger US dollar. Check out Euro dollar this morning. The dollar, 7 straight weeks, Lisa. 7 straight weeks of strength for DXY.
And there's a real question of why it should change and how many people came out over the past, say, week talking about parity as being a likely call with respect to the euro versus the dollar. Key question that I have is how much are we overestimating what the ECB is going to do to offset some of what we're seeing in the U.S., right? Are they going to cut more aggressively in response to tariffs, or are they going to try to hold on to a bit more, I guess, a little bit more strength? Strength is the wrong word for the euro, to basically retain some of the value.
Euro dollar, 105.38. I'm not sure strength, strong, or anything like that is being used to describe Europe right now. Under surveillance this morning, the search for Donald Trump's Treasury Secretary continues to heat up. Money managers Dan Loeb and Carl Bass advocating for Scott Bessent, with Elon Musk backing Howard Lutnick. Former Fed Governor Kevin Walsh and Apollo's Mark Rowan also emerging as contenders. Anne-Marie and the team reporting on this story throughout the weekend.
Yeah, so I was basically on the phone the entire weekend, phone blowing up, because the mess that is around this pick is starting to really unnerve a lot of people, including the president-elect. He appears frustrated that there's now become this fight between Howard Lutnick and Scott Bessent. Someone described it to me as a knife fight, and it feels like it was Howard Lutnick, the first one to really draw the knife. Now the issue is, because the president-elect is annoyed with this tension, they're starting to expand the search. My question is, are they expanding the search so Howard Lutnick could gracefully accept something else? Because Scott Bessent is still in the running. And I know that Howard Lutnick, according to my sources, they're preparing potentially to offer him a very fancy, exciting ambassadorship, say this Court of St. James. Or is this really a new search? And are we going to be talking about a dark horse candidate that suddenly emerges by the end of the week?
So based on your reporting and what I read elsewhere, including from the Financial Times, tariff seems to be at the epicenter of all of this right now, at least from the market standpoint. And this is where it could get a little bit messy for the transition team. I think a lot of people in the market now believe there is a huge amount of information contained in whoever he selects for this appointment. And if you end up with a Bessent or an Apollo, Rowan, good friend of this program over the years, you end up in a situation where the market believes, okay, they care about financial markets. If you go with a Lighthizer or a Lutnick, I think this market turns around and says, okay, I think we understand the priorities now. It's tariffs.
And that's basically what different hedge fund managers have been saying to the Trump campaign. If you want the markets to be on your side with this, if you want to see that run, put in the place of Treasury Secretary someone like Scott Bessent. Here's the interesting aspect, though. Is there a signal in all the names that are actually the front runners, all being people who'd be market friendly except for Howard Lutnick, right? I mean, is that something that tells you where the emphasis is on and that Howard Lutnick might be the outlier versus, say, a Mark Rowan, a Kevin Warsh, or a Scott Bessent?
Or do they potentially balance this with the NEC role? So I have reporting as well from last night with Saleha and Josh Green that Peter Navarro is in the mix for the top job at NEC. This was an individual that was drafting the executive order for the president to come out and remove the United States from NAFTA. The markets pushed back on this. And then there was a phone call between Mexico, Canada, the United States, and instead of removing themselves from NAFTA, they said, okay, we're going to renegotiate a new deal. But this individual is now being considered to be in the West Wing, and maybe that's a balance for someone that Wall Street likes at Treasury.
We do have one pick, Donald Trump nominating Chris Wright over the weekend as Energy Secretary. Wright runs a Colorado-based oil and natural gas fracking services company. He's a vocal proponent of oil and gas and has downplayed the threat of climate change. Talk about working out what the priorities are. Pretty clear on this front over the weekend.
And Bloomberg Intelligence coming out saying he could be positive for U.S. shale. This is someone who has a huge fracking U.S. oil and services industry. I was not surprised at all about this individual because why? About 24, 48 hours before he was announced, Harold Hamm, a huge donor to the Trump world, said this was his #1 pick, Chris Wright. And I think it was obvious the direction of travel on the campaign trail where the transition team was going when it came to the energy position.
What's fascinating is how much this sets up a divide between the shale producers as well as some of the big oil. Exxon and Chevron and some of the others who are committed to the U.S. staying in the Paris Climate Accord and who've actually committed to all sorts of green energy offsets. And then you have the likes of Chris Wright coming out and basically saying that's ridiculous and being much more of a climate change skeptic. This is a fascinating paradigm at a time where it's not clear how much the policies are going to be good for all oil players in the United States.
I don't know Chris Wright. I've never met Chris Wright. But based on the comments that I've seen from that individual, strikes me as he's very pragmatic about the energy needs, the requirements of not just the United States, but the world, and seems putting far more emphasis on energy poverty and what's actually required to lift people out of poverty, which is fossil fuels and energy, whether people like it or not. And that's where the emphasis is for me this morning off the back of this appointment.
If that's the case, I think a lot of people would agree. I mean, it's interesting. When I was in Peru talking to a different number of producers, one of the key questions was how much energy is necessary for whether it's the AI adoption or whether it is lifting people out of poverty. It's a question of how you get there. And it's a question of whether it is mandated by the government or whether it's mandated just by simply the market. And I think that that's really going to be the big divide. Do some of the oil majors stick to some of their promises if some of the necessities, if some of the requirements are lifted because it is economically advantageous to be investing in renewables?
The Energy Ministry also plays this key role in making sure these projects for liquefying natural gas get done. Something President Biden put a pause on and something Trump promised to undo. And I think that's something you could see really be undone within the first few days of this administration. He's also going to be added to a new Energy Council alongside Doug Burgum, which, by the way, was the only person on my bingo card that has gotten a job that I thought was going to get a job.
Yeah, I think we've seen some surprises over the last week, that's for sure. I want to turn to this development. It's a big one in the last 24 hours. The United States lifting some restrictions on Ukraine's use of Western-made weapons, authorizing long-range missile strikes on Russian territory. The Biden administration looking to bolster Ukrainian President Volodymyr Zelensky's position before Trump takes office in January.
So this is now given the red light to something that Zelensky has been begging, but it's going to be measures. There's going to be restrictions on how far Ukraine can go when it comes to these missiles. The issue is, of course, that we saw a bombardment over the weekend of Russia attacks on Ukraine, especially when it comes to energy infrastructure. Zelensky, though, said, words are words. I'll believe it when I see missiles.
Well, to me, the big question is how much is this trying to be preventative of further missile attacks? How much is this to seize more land before some sort of deal is negotiated by Donald Trump that basically says to Russia, you can keep whatever land you're basically taking, that you've taken over? And how much is this coming now because China is annoyed that North Korean troops are in Russia and might not necessarily get involved, so it might not widen in the same way that it would have? A lot of really interesting questions that this raises.
This has got to be a big focal point, the G20. David Gura joins us now from Rio, where world leaders are gathering. David, welcome to the program. We know that President Biden has met with Xi. We know that he went to the Amazon over the weekend. But the eyes of the world, I think, again, shifting back to Ukraine and a decision that this White House has made over the weekend. How much of a focal point is that this week?
We know that it's got a lot of conversations that are happening on the sidelines here. And I should say, going into this summit, I talked to Ben Rhodes, who is a senior foreign policy advisor to President Obama, who was here at a moment of transition in 2016 at the G20 when Donald Trump was coming into office. And he cautioned me against looking too much at sort of how these foreign leaders are thinking about what a second Trump term is going to be like, and instead watch how they're moving to sort of interact with each other and think about how global alliances are going to change. But to your question about Ukraine, it looms large here, and it's kind of fascinating the way in which it does. Yes, we've had this development over the weekend, but you look at who's here and who's not, and President Putin declined to come here. He thought that his presence here would be more of a distraction than anything fruitful. And then in the weeks leading up to this summit, you had Vladimir Zelensky really lobbying hard, petitioning President Lula to sort of invite him here, make him a guest of the summit. In fact, that didn't happen. That request for an invitation went unrequited. So, at a summit like this, the goal at the end is to get to some form of agreement, to come to terms on this communique or statement that all of the parties involved agree on. The weirdness of the G20 is unlike the G7, where you're talking about a group of allies. The G20 is not that. You have countries that are frankly not allied with the United States here as well and making their opinions known. So we know that over the course of today and tomorrow, John, it's going to be these kind of fraught conversations on the sidelines in these bilateral meetings where I think the conflict in the Middle East is going to loom large, and indeed what's happening in Ukraine is as well.
Well, speaking of the conflict of the Middle East, Saudi Crown Prince Mohammed bin Salman decided to cancel his trip to the G20. Reportedly, this has to do with something medically wrong, an ear condition. But David, honestly, is this just basically world leaders deciding to skip this G20 because it doesn't really matter? It's an exit interview for President Biden, and the individual they really need to speak to is sitting in Palm Beach.
I think that's absolutely right. I mean, yes, this is important because there are some new faces here that I think some world leaders want to get to know. So Keir Starmer is coming here, of course, from the United Kingdom, and has as a host, as we understand it, of bilateral meetings, including one with President Xi this morning that's going to take place here in Rio. But I think you're right. This is a swan song for the current president, and somebody who, over the course of his long career in politics, has really advanced the cause of multilateralism, this kind of dialogue. And suffice to say, it doesn't seem like that's as in vogue as it used to be, and certainly isn't going to be in just a few months here. So I think they're trying to figure out what the future looks like, again, sort of what their alliances are going to be like and how they're going to change. But to your point about the action being in Palm Beach in South Florida, we've seen a number of leaders here either stopping on their way to Rio in Florida or planning to go there afterward, President Milei of Argentina among them. They know that going forward, that's going to be the person who's going to be the real change maker, the person with whom they're going to have to deal, the person who they're going to have to figure out sort of how he's thinking about issues of trade and just sort of broader alliances and geopolitics. So there are open questions about that. I think they're trying to firm up sort of their thinking on that and get a better sense of sort of his sensibilities going forward.
David, when it comes to probably the most important bilateral relationship for everyone in the world is between China and the United States, the world's two biggest economies. What did we learn from that meeting between Xi Jinping and Biden in terms of China's priorities looking into 2025?
So I'll start with what President Biden said on the sidelines of that meeting, that he was very quick to say that he's improved that relationship. There is now open dialogue, more open dialogue between Washington and Beijing. He sort of sees that as an achievement. There was kind of some sorrow, I think, in the way that he spoke about the relationship. He underlined its importance, but kind of nodded to the fact that all that he's done to try to bring that frosty relationship back to life could change on a dime when Donald Trump returns to the White House. Look, you listen to what President Xi had to say around that meeting as well. It was a forceful statement. He kind of nodded to the fact that he thinks it's in the world's interest for these two superpowers to have a cordial relationship with one another. Dialogue is good. Friendly competition is good as well. But he drew these red lines when it comes to trade and democracy, things that he sees as things about which China would fight back if they needed to. So he's taking a position as well here, again, going into this moment of transition globally, where you have Donald Trump returning to the White House. China, of course, will not sit idly by, making known the fact that China is prepared to fight back if Donald Trump follows through. And what he promised over and over again on the campaign trail and since, that kind of economic war that he's waged against China would only deepen when he comes back to power.
David, how much is China already fighting back in the sense that they're taking advantage of the policy uncertainty in Washington, D.C., the lack of clarity around what Donald Trump's priorities are going to be, and going aggressively after trying to be the champion of free trade, however ironic that may be, and try to bolster their relationship in places like South America and, frankly, around the world?
You were in Peru last week. I'm in Brazil this week. I think it's really evident to me, as I'm sure it was to you, just the role that China is playing when it comes to development financing and philanthropy, kind of infusing a lot of money into this continent and so many others around the world. It is trying to wield a lot of influence in the developing world. I talked about sort of the diminished role of President Biden at this summit. President Xi has a much sort of more formal kind of front and center role here, and a lot of countries are trying to meet with him as well. So I think we're seeing that transition underway. I don't want to make it seem like that's something that's happened overnight. And going back to what we were just talking about, sort of the role that China has been playing here in South America, this is a long game for China, but I think it's kind of coming to fruition at this point, and sort of it's kind of established itself as another pillar on the global scene, kind of making inroads economically and developmentally here in South America and in other nations around the world.
Sitting here wondering when I get to go to Latin America as well. David, thank you. David Gura in Brazil, Lisa back from Peru. I'm sitting here still in New York.
Oh, do you want to go to Peru? You want to have some ceviche?
Go to Peru.
Is that what's going on?
Yeah, sure, why not?
Big corn kernels.
Yes.
Love those.
Oh, did you enjoy yourself over the last week?
Great food.
Sounds
really
like you might have done. Okay. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Hundreds of HSBC managers have been asked to reapply to keep their jobs. People familiar say the interviews are already underway for HSBC's newly formed corporate and institutional banking division. Senior staff are competing with each other for jobs at the new division. Job cuts are expected to be announced in the next couple of weeks. And Morgan Stanley strategist Mike Wilson, known for his bearish views on U.S. equities, has surprised Wall Street with a bullish outlook for 2025. The strategist expects the S&P to end the year at 6,500 points, with gains driven by economic growth and more Fed cuts. He previously had a 5,400 target for mid-2025. The new outlook, though, that is calling for an 11% gain from the current levels. Warner Brothers Discovery has settled its lawsuit with the NBA after it lost its decades-old broadcast rights to broadcast games. The TNT and Max owner will be allowed international NBA rights in parts of Northern Europe and Latin America. Additionally, the company will continue to produce its flagship studio show inside the NBA, hosted by Ernie Johnson, Charles Barkley, and Shaquille O'Neal. The show will be licensed to Disney to be aired during ESPN coverage of certain NBA games. And that's your brief, John.
Hey, Danny, thank you. More from Danny in about 30 minutes. Up next on the program, Europe under pressure.
If you look at the good, the bad, and the ugly of the global economy, unfortunately, Europe is in the ugly. Cyclically, they're challenged. Secularly, they're challenged. These dynamics today mean that if you're lagging, you are likely to lag even more.
How much more? That conversation up next.
In case you missed it on Bloomberg Technology.
We're excited to really change the expectations for space companies, where you have this always-on, reliable, and frankly dynamic satellite connectivity that you would expect of your power grid or of your cell phones. And so we think that this is a huge opportunity space, and our first contribution to it is through shared infrastructure.
You can see this whole ecosystem developing, and you have an exponential growth right now because easier access to space means more demand for space, and that's the definition of an exponential growth function. So if you think about someone like Varda, who is only possible now because access to space is cheaper and easier, we're demanding more access to space.
I think that's what's so exciting from a business perspective, is the fact that if you can do it, you're one of a few numbers of organizations in the history who've actually pulled it off. And so it creates a very defensible position, because again, space is very, very hard.
Don't miss Bloomberg Technology live every weekday.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week.
More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
The highway to the danger zone, HSBC, that danger zone for equities, 450 on a 10-year. Right now, your 10-year, 446. Equities, just about unchanged. Under surveillance this morning, Europe under pressure.
If you look at the good, the bad, and the ugly of the global economy, unfortunately, Europe is in the ugly. Cyclically, they're challenged. Secularly, they're challenged. There is no definitive political leadership in the two countries where you need it most, Germany and France. These dynamics today mean that if you're lagging, you are likely to lag even more. It wouldn't surprise me if you see that differential go higher. It wouldn't surprise me if you see the euro go weaker.
So here's the latest. The outlook for Europe's economy looking bleak following Donald Trump's election win, with the region bracing for a potential trade war. Jill Mowack of AXA Group writing the Eurozone will find itself in a complicated position. We think the ECB will need to look through a not entirely spotless short-term outlook for inflation and engage in a more forceful restriction removal path. Jill joins us now for more. Jill, welcome to the program. Everyone on this show over the last week, overwhelmingly bearish on Europe. Can we just start here before we get into what the ECB needs to do? What could go right for Europe over the next 12 months?
What could go right? Well, the positive thing is that wage growth now exceeds inflation, which means that if households are not completely obsessed with building up more savings, there could be some additional consumer spending. That's a possibility. Another thing that could go right is that instead of the massive trade war which we are bracing ourselves against, there could be a sort of more benign stance coming from Washington DC, and as an economy that is reliant on exports, Europe could do okay. But that really is it, because otherwise most of the engines of growth are switched off at the moment.
So given that, Gilles, do you think that the negativity is warranted, that maybe not even enough is baked into the outlook for the euro as well as for the European region?
Well, for me, the euro and the outlook for the European region are two different things. And to some extent, they could move in different directions, in the sense that a weaker euro is definitely what Europe needs right now. If we need to deal with tariffs on European products in the US, if we need to deal with slower traction from China, heightened competition from Chinese products on third markets, then a weakening of the currency is definitely what is needed to avoid that our outlook, which is already quite mediocre, doesn't get worse. And I think we have ingredients for that because the sort of signals that we can perceive from the ECB right now is that they are taking the measure of the downside risks, and there has been a very clear change of tone from Frankfurt in the last few weeks.
Okay, so Gilles, if you're saying that basically this is a region that needs a weaker euro, how weak is necessary in order to get some of the exporting engine back into gear?
Well, if you look at what we used to have as sort of a reaction function, if you think that we're going to end up with a 10% tariff on European products entering the US, usually you kind of offset half of it with the currency depreciation. So you probably need another 5% decline in the currency. Some of it is probably already priced, but what the market is talking about right now, which is moving to parity, is something which probably makes sense.
When it comes to how Trump was going to deal with Europe, we do know that he does like to deal with nations on a bilateral basis, not this multilateral basis. So maybe he won't deal with the European Union as a whole, but he'll go country to country. Who is best placed to deal with Donald Trump?
On this, I would use a phrase that Jay Powell used himself, not permitted under the law. Trade policy in Europe is a European matter. I know it may sound strange to non-Europeans, but the treaty is pretty clear on that. I understand why it would be tempting for foreign governments to try to negotiate bilateral deals with Germany or France or whatever, trying to work on their perceived weaknesses and their various interests. But down the road, on anything of any kind of magnitude, you need to deal with Brussels. The treaty are perfectly clear on this. And for instance, if there was a decision to try to leverage on the US capacity often to move Berlin in a certain direction, we've seen, for instance, that Germany has opposed the European Commission's decision to levy retaliatory tariffs against China. It did not change anything. The tariffs on China moved. So you can actually get into a conversation with national governments, but if those national governments cannot actually build a coalition around themselves, then it's not necessarily followed through in Brussels. So it may not be actually the right solution for anyone trying to negotiate with Brussels.
Gilles, just taking a step back and listening to your theory, I just wonder why European bonds aren't a screaming buy right now. If essentially you think a weaker euro is the way to go, you think that fiscal thawing in Germany is overstated, they're not going to really engage in any kind of big stimulus, why wouldn't people just go headlong into long European bonds? Because guess what? Those yields are probably going lower.
No, I agree. I think we've probably reached a point at which it's going to be quite tempting because the risks to growth are on the downside. The risks to inflation now are on the downside, even if the data has not been absolutely pure on that front. There is going to be probably some overall restriction in the supply of bonds next year relative to what we would have had in a BAU situation. So yes, probably we're going to see a correction in long-term yields in Europe, especially if, as I expect, the ECB is increasingly clear about the path. They've been cutting rates, but I think they need to move to another step, and I think they will, which would be to engage in forward guidance, which would be to clearly steer the markets towards a proper cut, a large cut in interest rates.
Gilles, appreciate your time, sir. Gilles Moak there of AXA on the shift that's required from this European Central Bank. Up next on the programme, Amanda Lynham of BlackRock, Henrietta Trays of Veda Partners, Francisco Blanch of Bank of America, and Kate McShane of Goldman Sachs. From New York, the second hour of Bloomberg Surveillance. Up next.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
What about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC, CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in now a GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have Take-Two numbers.
Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching The Close.
Welcome to Balance of Power.
This is Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
In the background, you've had a lot of these macroeconomic uncertainties be resolved.
We think the inflation problem really is in the rearview mirror.
We're skeptical as to whether or not the Fed is going to be able to carry on cutting interest rates.
One of the things I really don't want to see is a 50 basis point rate cut. If that's happening, we're wrong on the fundamental story and the growth story.
The problem has not been the Fed for the economy. The problem has been the Fed and the way the market has been pricing it.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. The second hour of Bloomberg Surveillance starts right now, and here are your scores. Equity futures on the S&P 500 attempted to bounce by not even 0.1%. The Nasdaq 100 on a 5-day losing streak up by 0.5. On a Russell, we're up by 0.3. Your week ahead dominated by earnings, including from retail, Walmart and Target. The big one coming from NVIDIA. The big one for this market right now, though, Game of Thrones. Down in Palm Beach. Let's talk about the names, shall we? Howard Lutnick, Scott Besson. We've also heard it's going to be the likes of Kevin Walsh, Senator Haggerty in the race. He's going to join us tomorrow morning. Looking forward to that conversation. The list is getting longer.
Yeah, at a time when a lot of people are looking as this is sort of the linchpin of what the priority is in the Trump administration. Is it tariffs, or is it some sort of strong American, strong dollar, or is it weak dollar? What kind of policy are they actually looking for at a time when the other picks don't give a lot of clarity about the overarching priority from this administration?
What is so peculiar is why are we having a Game of Thrones episode when it comes to the Treasury pick? President-elect Donald Trump ran on an economy pitch. This is most dearly, probably closest to his heart. So why didn't he come out almost immediately with the economic team first? The source of the tension, according to my reporting, has to do with Howard Lutnick. He's the co-chair of the transition. He's the producer. Now he wants to be the star, putting his name in the ring for Treasury. And that's become the source of a lot of tension between him and Scott Bessent, who's this key advisor for President-elect. So now, given the tension has becoming not just within Palm Beach, but bleeding out into the social media space, on Twitter this weekend, with Kyle Bass, with Elon Musk, they're starting to expand the search for other names.
Did you see the walkout into Madison Square Garden?
I did.
See that over the weekend? I think the one thing we both noticed, none of those candidates were there.
None of those candidates were there. Potentially, Howard Lutnick was there, except there was no photos of him and there was no images of him. I was told that he was on the plane, but he was not in that now infamous photo of them all, you know, having McDonald's. He wasn't there, and he wasn't in the walkout to MSG.
Speaker Johnson doesn't strike me as a kind of UFC guy, does he?
My favorite is it's sort of this exercising cool. Who's going to be the first buddy? Who's going to be the person who's going to be sitting next to him at UFC? I mean, we're going to do this again, and this is what markets are focused on.
I woke up Sunday feeling like I kind of missed out, that we should have gone to Madison Square Garden.
Is that right? Did you feel like you would have walked out and had
atmosphere looked amazing.
Feeling cool?
Atmosphere looked amazing. I'm not sure they want me to walk out with them, but the atmosphere looked amazing. Equity futures right now on the S&P up by 0.1%. Coming up this hour, we'll catch up with Amanda Lynham of BlackRock on a 2-month bond slump. We'll speak to Henrietta Trays of Veda Partners on the next Treasury Secretary, and Francisco Blanch of Bank of America on energy under Trump's White House. We begin this hour with stocks lower and yields mostly flat after reaching their highest level in 6 months on Friday as investors weigh the Fed's next move. Amanda Lynham of BlackRock saying uncertainty around the path for monetary policy in 2025 is elevated, while not our current base case, a re-acceleration of inflationary pressures materializing from potential fiscal and/or trade-related policies following the US election could cause the Fed's terminal rate to land higher. Amanda joins us now for more. Amanda, good morning. It's good to see you.
Good morning. Thank you for having me.
It's only a few months ago we were talking about the Fed getting ahead of the curve to insulate the labour market, and maybe they needed to get accommodative. And now we're back to a word that you use in your work, which is normalizing, except normal might be a whole lot closer to where we are than we thought a month ago.
Right, and I think that distinction between normalizing and easing is really important. We would not be surprised for the Fed funds terminal rate to land somewhere around 4. But again, the drivers of that are really important. If that is because growth is holding up really well, that is something that the credit market can really digest. If that is because inflation is reaccelerating and there's a lot yet to be seen on the policies that are coming down the pike, we have some clarity, but the path is very wide in terms of potential outcomes. That would be a much less supportive outcome for credit, especially if it's coupled with slower growth. I think the bigger risk for corporate credit is what we're characterizing as a disorderly sell-off in Treasury yields. If we have a gradual backup in Treasury yields, again, because of good growth, that is actually a tailwind for credit because it brings in yield-based buying. If it's disorderly, feels spooky, then it's coming back to the fall of 2023 when I think that would give investors some pause.
Can you define disorderly and how orderly things are at the moment?
When we chat with market participants, that 4.60 level is really the area at which they become concerned. I think if you start to see the velocity of that back up really be swift, so I'm talking about gaps of 15, 20 basis points in a day for a consecutive period of time, and again, not driven by positive growth surprises, but more driven by some downside risks on the policy side or upside risks on the inflation side. That's, I think, where we would start to be a bit concerned, because then if you're a yield-based investor, you may come to the conclusion that it just waits to deploy capital into corporate credit, and that yield-based demand has been incredibly strong. In the context of all of this kind of path dependency, as you know, credit spreads have made news cycle tights, and so that tug of war between spreads and yields is very much still in place.
John asked the key question, right? What constitutes a disorderly move in yields at a time where 15, 20 basis point moves are something we have seen? This isn't abnormal, and there's a question of whether they have to stick for a longer period of time. I mean, let's say Howard Lutnick gets chosen as Treasury Secretary, and people view this as really an endorsement of stronger tariffs at the outset before some of the other tax cuts or other pro-growth types of implementations. Do you foresee that type of disorderly move in Treasury yields?
That sequencing really does matter. I think leaving some of the candidates to the side, if you have a situation where you have upward pressure on inflation, and I think what really concerns us is not so much the targeted tariffs, but the across-the-board tariffs that could spike retaliation, because then you're moving from a discussion of the one-time price level argument that's been floated, which I'm not necessarily sure I agree with is not that disruptive to the market. But if you have kind of retaliatory tariffs back and forth, then you actually have pressures feeding on themselves on the inflationary front. And I think it becomes much less certain. We kind of take a step back and say, okay, well, where do we go from here? We like building in floating rate exposure to portfolios. We like financials because they would not be exposed to the same degree on tariffs because they're more of a services-based sector. We like domestic-facing companies, actually. So ironically and somewhat counterintuitively, that may bode better for high yield and leveraged loans because they tend to be more U.S. focused as opposed to multinationals. And financials are really important. Financials are 33% of the IG index, and they're still trading wide to non-financials. And so if we think that they can tighten, that can actually pull index level spreads even tighter than where they are now.
There's a larger question, and John and Anne-Marie were focusing on this last week, about at a certain point, if you see the companies out there as being in pretty good shape from the U.S. and continuing to be so, could you see spreads narrow to such a degree that even investment-grade companies trade within Treasury yields?
Yeah. So I think you had a conversation last week on this with Brian Weinstein, which I thought was great. Look, I think there is scope for spreads to move tighter. I do not see a world where en masse, triple B corporates are trading tight to the sovereign, but you do have some AA and a few AAA companies still left outstanding in the corporate credit sphere that are trading really close. I mean, the spreads to treasuries are in the single digits for some of those bonds at the moment, depending on where they're priced to. I think the net here of everything is that corporate credit is in a pretty good place. It all boils down to growth. If we have a supportive growth backdrop, I would say manageable tariff risk, and then I would say the continuation of yield-based support plus some favorable technicals, that's a recipe where credit can stay in its current tight range or even move slightly tighter. I think waiting for a significant catalyst for spread widening in credit would really involve a combination of persistent upward pressure on inflation, a slowdown in growth, and again, that disorderly sell-off, which it does feel like the volatility of the bond market has been elevated relative to what we've been used to in past cycles. But I think it would really be that kind of 460 range where folks get concerned up to the 5% range that would catch our attention.
Amanda, just talking about this disorderly bond sell-off, I'm thinking about how disorderly this Treasury pick has come to be. And if you talk about the real impact of tariffs, what I'm hearing from sources that Peter Navarro is really in the mix, this trade skeptic at NEC. And Howard Lutnick, who's come on and talked about the fact that you should use tariffs, is more of a yes man to Donald Trump. The real tariff man would be someone like Robert Lighthizer, who already worked for him. What would a Lighthizer at Treasury, Peter Navarro at NEC, mean for this bond market?
Well, again, leaving the specific individuals aside, I think the issue that we have to come to grips with is what does this mean for kind of ongoing upward pressure on inflation? And really the worst case scenario for credit is kind of an across the board tariff that is also coupled with retaliatory tariffs that provides kind of upward pressure on inflation that corporates can't manage, right? And I think that's the key, is that if corporates are feeling that they have significant cost input pressures that they are not able to manage through, then you get to this situation where right now corporates have just been hoarding labor and they haven't been laying off. If you get to a point where corporates need to use the layoff tool to protect their margin,